All right. Good morning, everybody. Good morning and welcome. Welcome, welcome. It's 8:57, so I'm going to ramble for a minute. Let the other people get in. Guys, I want to welcome you to the room. It's great to have you. Welcome to the Next Gen Education Cab. Nice to see you. Groove Logic. I like the name a lot. Um, Guys, my name's Mark Novak. Craig, welcome to the room. I know that you're new with us, Jim 1966. It's great to have you. And I believe there's a couple other new people in here. Um, a lot of new names, which I'm loving to see, guys. I am a rambling man. Hey, Chris. Um, I'll tell you what. For those of you that don't know me, let me tell my story. That'll be my rambling today. Um, Luciano, great to see you, guys. I was not born a day trader. I wasn't born a chart reader or a classroom teacher. I was in the service industry for 30 years. I was the general manager of a restaurant. That was my chosen profession because that's what I was really good at. Second spine fusion took me out of the game. My surgeon said, "You are absolutely crazy if you go back to that lifestyle." So my brother said, "Hey, you know what? It's time to learn how to read indicators." Hey, Chariot, Bobby T, nice to see you. So what I did is I started exactly where you guys are on day one. And I floundered a lot. I'm not gonna lie, guys. I screwed it up every way that I could possibly screwed it up. I ignored every bit of advice that my brother gave me. I 100% ditched the path that had been proven. And guys, I jacked it up 32 ways to Sunday and tried to go live. Um, I'm cheating on NASDAQ. And guys, I lost about 5 grand in about 3 hours. For some people, 5 grand isn't a lot of money. To me, it was a lot at the time. It wasn't a loss I was happy with at all. Um, so then I started following the plan, and we're going to talk about the plan today. But what I realized is there were a lot of pitfalls that I encountered. There was a lot of things that happened that were very avoidable. So about 2 years ago, I asked my brother. I was still learning the software, wasn't sure what I was going to do. Um, yeah, no worries, Craig. We can build a chart. Is there something specific that you're looking for? But I'd be happy to. Let me open up my Ninja 8 again. Um, and we'll build one together because I know that's where everybody's at. But absolutely, that's exactly what this class is for. Like, let's get you everything that you need. Um, so guys, what happened is I tried my best to do this on my own. The basis of each line. In regards to, and Craig, I know you guys have a lot of experience in the markets. Um, one of the things that I don't have is a lot of experience outside of NextGen. Um, so when you say the basis for each line, you mean how the indicators are created? I want to make sure that I'm understanding the question. Um, the details of the actual software. Let me go to the day trading page. Oh, yeah, we're going to talk about that all day, my friend, without a doubt. Um, And that's exactly what this class is, guys. This class is designed for the people that are brand new that are coming in, and I'm going to talk about everything that you see. It's just a moving average, Chris. That's it. And then, guys, I'm going to remind you, I get sidetracked so easy. All right, let me finish my story real quick. I screwed it up bad. I made a million mistakes, and about a year in, 6 months in, I asked my brother, I said, "Can I teach a 101 class that keeps people from doing these mistakes?" A lot of you were in that 101 class back when it was the afternoon. And then eventually, I studied, I practiced, my chart reading got better and better, and I took over this class from my brother so that he could go be a professional day trader. All that being said, guys, is if it's been broken, I probably broke it. And if there's a fix, I probably know how to fix it in a trading standpoint. And that's what this class revolves around. This class revolves around giving you the information that you need. And let's talk about that word right there. The information that you need to be successful, not necessarily the information that you want always, But I will always try to get those answers. So, Craig, I'll try to get you the answers that you need. But if I miss something, I need you to tell me what it is. But it's a lot of moving averages. And then it's amazing Fibonacci lines, and what we do is we combine them to gauge these different concepts. So I'm going to go into the day, and we're going to go, and hopefully I'm going to answer 90% of your questions. But if you're like, oh man, but what about this? Just do exactly what you did. Pop it into the room, make sure that you ask, and we'll get you exactly where you need to be. But I've got my NinjaTrader 8 up. If you want to see a chart built, it's no problem. But before we do anything, guys, and I do this every day, and I'm trying to hurry to get to it, because at 9:15 a.m., Fed Chair Powell is speaking. And you see it, it's a bright red box right next to the news. Guys, I'm not going to lie. Couldn't care less what Fed Powell says because I can make money either direction. But what I do care about is that um, his voice is going to spark fear or greed or something in the market that makes it typically very volatile, almost untradeable because it's moving so fast. So I don't trade news. I don't care what they say. It's not like trading places where I'm waiting for the orange juice reports to come in. All I know is that anytime there's a red box, or an orange box. That is a news release that may move the market, that may really kind of make it bounce, spike, jump, all these things that become untradeable. So I sit on my hands during news releases, and if somebody reminds me at 9:13, 9:14, I'll open up either Nasdaq or the S&P when Fed Powell speaks, and you guys will see exactly what I mean there. And then everything that I talk about is going to come from the page right here, guys. This is our education page. This is welcome to Nexgen. And Craig, I think that if you go to, nope, let me go back to the education page. And I click on this button. This video right here, and this is a short video from John Novak, but this goes over um, all of those concepts that you're probably curious about. But that's John Novak talking about his software, what you see, what it does, how we use it. That's a great one to go back and take a look at. And then Gary is exactly right. The glossary of terms is a great spot too. So when you're worrying about, hey, good morning, Chef. When you're wondering about these one-to-ones, this you can literally click on it and it'll show you the mathematics behind it, what it is. But the way I'm going to teach this class, guys, is I'm going to teach this class and I'm going to give you exactly what you need to be able to trade the software. And I made this picture this morning and I wanted to share this with you guys. I tried to have 3 cups of coffee today, so if I get a little weirded out, just let it happen. Nothing that I teach is market specific, guys. Nothing that I teach is this is your S&P trade, this is your stock trade, this is your cryptocurrency trade. What we do, good morning, Sydney, is I teach patterns, and these patterns repeat themselves in the market every day. Every market, they go through and they just happen over and over and over again. And what we've done is we've created a set of rules, which you're going to learn this morning, that identify when this pattern is happening and how to use it to your advantage. So I know that if you have a history and you've only been a stock trader, or maybe ETFs, and I'm not gonna lie, I don't even know what an ETF is. Maybe you're into crypto. I know I have guys that hedge their options. Really, any time frame, any market, guys. This is what we're doing is we're just teaching patterns. And I use this picture as an example. There's no telling what market this is. There's no prices. It's just bars on a chart. Well, I gave it away up top. There we go. There's no telling what market this is. It's just bars on a chart. But what we're going to learn this morning is that when your triggers look like this, you're going to be able to, probably by the end of this classroom, I hope, identify that this is where you want to get in to continue. And it has nothing to do with whether it's the S&P or crude oil or Nasdaq or gold or soybeans or Apple stock or Tesla. It has everything to do with a couple advantages that we're going to look for. And those advantages come in the form of the rules for the high probability trend trade, guys. And this is my focus every day for the first hour. As we talk about the high probability trend trade, we talk about three advantages that create a trade, three rules. Each rule individually creates one of these advantages in yellow. And these three advantages in yellow are what create a trade. And this is what we're going to talk about this morning. This is your high probability trend trade. Guys, this is your foundation. This is grades 1 through 12, where you get the basics, that understanding. And we focus on this trade for the first hour every day because it's the rules for this trade that are going to give you really the most important skill that you can ever have. Guys, you're going to become a chart reader. And 90% of your day, believe me when I say this, 90% of your day is about chart reading. 10% of your day is about taking those three advantages, turning them into a trade, whether it is the high probability trend trade or maybe a medium probability trade, whether it's a momentum style trade or a high volume area trade, it doesn't matter. But the advantages hold true, and your ability to read your charts is what's going to set you up. And again, your charts don't know what kind of charts they are, guys. It's the patterns that become important. So you're going to be able to look at your workspace and you're going to understand three very key concepts. You're going to understand where the market is likely to continue. This is going to become your area for entry. You're also going to understand where the market is likely to go, and that's going to help you set up profit targets. And then finally, you're going to understand where the market is likely to stop, and that's going to be your key to not take any more trades. And I want to show you from crude oil, a trade that I took this morning, exactly how those concepts come in. I knew where the market was likely to continue, and you can see that that's where I entered. And everything that I did was based off of the strength and the look on the large chart. Um, this big blue line is Fibonacci support. And when price reached that big blue line and none of my triggers broke and reversed the market, this sets the tone for everything, guys. When an area holds, reverses the market, sets the tone for everything. Then it gave me my first rule, which says that I must have an awful lot of momentum. And it gave me my second rule. It said that I have to have an area that's likely to break, which gets me to my entry over here on a smaller, faster chart. And then my entry takes me all the way to that key Fibonacci resistance, right where the market is likely to go. And guys, this is what we're going to talk about for the first hour. We're going to talk about a trade that repeats itself on every market. You're going to turn into a chart reader by using these three rules. And you're going to understand where the market is likely to continue, likely to go, and likely to stop. And I'm going to walk with you every step of the way to make sure that you have that understanding. These three rules, I'm going to warn you guys, it happens on only two charts. I know you want to overthink it, but I want you to keep it simple. Two charts give you everything that you need. The large chart, guys, this is the big crowd. These are the people that move the market. Large chart is all of these guys. Like collectively, all the money says they want the market to go up. All the money is going to define direction, momentum, and areas, guys. And we're going to take advantage of what the large crowd is doing. And our first two out of three rules must be met on the large chart. But when they are, you'll have the advantage of momentum, a market that's likely to continue in the direction of the trend. And you're also going to have the advantage of a clear path, which means that you haven't run into one of those key Fibonacci areas. Once you have these two rules met, we're going to go to an entry chart. We're going to go to a smaller, faster chart. And I want you guys that are overthinkers, my engineers, to recognize that I didn't say what size it is. I didn't talk about the bar structure. I didn't talk about anything other than the large chart leads the way. Keep it simple. The small chart will take one bar on the large chart, the absolute most current, run it up front bar, and it will reduce it to 15 to 30 bars. It will break that one bar up into sections, and this is where you identify where the market is likely to continue. This is where rule number 3 pinpoints where the market is most likely to continue, and it's just refining a broad stroke of a brush. And this is rule number 3. Your entry gets you into the market, but your large chart leads the way. So we're going to focus today. I'm putting these concepts together, these three rules, to create the high probability trend trade. And that high probability trend trade is nothing more than a foundational trade. It's going to teach you to read your indicators. And I'm going to break down the indicators individually to see how they perform on the chart, what they're giving you, and the ideas behind it. So we're going to start with rule number one. And rule number one says that we must have strong trigger lines. And in order to have strong trigger lines, the only way that it's possible is to trade with the trend. So one of the little cheats that Nexgen has given you is color coding. If the background on your large chart, your big chart, is green, you're in an uptrend, and you should only be looking for rules to be met for high probability trend trades long. This is kind of a safety measure. Morning, Jose. If the background on your large chart is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. And guys, I'm going to tell you right now, if you break it down into its parts, it becomes easier to grab the whole. So let's go and let's test you guys. This is the S&P. Uptrend or downtrend? I love it when you answer the class, but at least say it in your own little office there. The background is green. We should only be looking for rules to be met for high probability trend trades long, right? It's really that easy. Crude oil, only looking for rules to be met for high probability trend trades long. NASDAQ, only looking for rules to be met for high probability trend trades short. Guys, that's how fast the first lesson comes into play. Once you've established the trend, you know which way you're looking. Let's get those strong triggers. In an uptrend, the only way to have strong triggers is when the small triggers, so guys, here's your first little indicator lesson. Small triggers, two lines create one small trigger. This is nothing more than a fast moving average. Two dashed lines create your large trigger. This is a slower moving average. These two moving averages work together to identify momentum. When the small trigger breaks above the large trigger, it paints the background green. This lets you know that you're only looking for rules to be met for a high probability trend trade. So if you're colorblind, that's your view. And I've had colorblind clients. That's why I say that. It's the separation. Is it coming up, Rob K? It's the separation between the small and large. Here we go. We'll do the lesson on here right into news. When the smalls break away from the large triggers, when it creates space between the small and large, this is what we call odds favorable momentum. Odds favorable momentum means that this market is likely to push in the direction of the trend. Next-gen users will use this odds favorable momentum because it's the most favorable look to buy Fibonacci support on a smaller, faster chart. It's the most favorable look to buy Fibonacci support on a smaller, faster chart. Odds favorable momentum, that was kind of a dud. Maybe they're waiting a minute. Odds favorable momentum sets the tone, guys. And it doesn't matter that they're moving averages. It doesn't matter where they come from. It doesn't matter what the numbers are behind them. But when I have separation between the small and the large, both are wide, angled in the direction of the trend, I know that the odds are favorable for the market to continue up. In a downtrend, the smalls are below the large, both are wide, both are angled in the direction of the trend. Guys, this lets me know that the odds are favorable for the market to continue down. So odds favorable momentum is rule number one. Rule number one sets the tone for everything, guys. Momentum covers mistakes. Let me tell you, I'll say that again. Momentum covers mistakes. Momentum, when that market is pushing its absolute strongest, it's going to mess up, or it's going to fix if maybe you fudge on the other two rules. But rule number one is strong triggers. Rule number one happens on a large chart. Rule number one is separation between the small and large, like scissors that are open wide, ready to cut. Is everybody good with that? Especially my newer folks. Chariot, Craig, Jim. Wasn't there someone? Big Game Biff. I love that name. Who else is new in here, guys? Raise a hand. Let me know so I can keep tabs on you, make sure you're good. Awesome. And Craig, I'm telling you right now, it gets better every day. It gets easier every day. So this is our strong trigger look. We saw it in the S&P. The opposite of strong is weak, right? When the small triggers work their way back inside of the large triggers, when those scissors close, right? Hey, Matt, good to have you, man. When the scissors close, they're open, ready to get work done. The scissors close. Man, you're just taking a stab at it. This is weak triggers. And when you have weak triggers, anything can happen up or down. I think the language is important. One is odds favorable. One is anything can happen. And what you're going to find is these anything can happen triggers, these weak triggers, precede reversals in the market, especially when it coincides with Fibonacci. So if we go back, let's see if news did anything. It really didn't. If I take all of the noise off of this chart and just run two triggers, I want you to see some pretty common things, guys. Odds favorable, the market pushes, the market pushes, the market pushes, and this is without the benefit of Fibonacci. Those triggers weaken, and the market reverses. Weak, flat triggers, the market goes up. Weakened triggers, it pushes down. And you see this over and over. And but Mark, there were strong triggers. I bet you dollars to donuts we're floating right around a key Fibonacci area here. So it's not just triggers on their own, it's not momentum on its own. We're also going to go through and identify the places that can stop the market. Guys, look at that. Even with that odds favorable momentum, there isn't a Nexgen user alive that took that short because it's directly into Fibonacci support. And we're going to talk about how to identify that as a termination condition. But I want to remind you that 90% of your day, guys, 90% of your day is spent reading your indicators. 10% is taking advantage, jumping on that thing when it's giving you what you need. So this is my rule number one picture. And notice that over here there's separation on the left side. The market continues to push down. It weakens. Anything can happen triggers. Get in the habit of associating words with the looks. That gives us a reversal. When it gives us the reversal, there's that odds favorable momentum. Guys, you're going to be able to pinpoint exactly where this tail on a large chart is most likely to happen. We don't trade entries on the large chart, but notice how that little pullback creates a tail or a wick. You guys are going to nail it right there. This becomes the area where the market is most likely to continue. And it goes all the way up until anything can happen triggers. There's your reversal again. Odds favorable. I see a tail. It pushes down. And this is just rinse and repeat, guys. Focusing on rule number one to lead the way is a huge advantage. And then you're going to get into these spots where things don't agree. Your small and your large are different colors. Your small and large are the same color, but they're a different color than the background, right? So if I'm in an uptrend, good morning, Dwight. The only way I can have odds favorable momentum is if my smalls are above the large and they're both wide and angled in the direction of the trend. Guys, this is a transition phase. This is where the people that move the market are fighting. Buyers and sellers put their brass knuckles on, they're in the schoolyard, and they're going to town. Next-gen users never have to get caught up in this. You don't have to predict. You simply wait for them to fight it out. One of them's going to win. They always do. Let them give you that odds favorable momentum, and then we'll start looking for that next advantage. Once I have strong triggers, I'm going to make sure that I'm not trading into a termination condition. I'm going to make sure that I'm not trading into an area that's likely to stop the market. I'm going to make sure that I have room to a profit target, and that gives me the advantage of a clear path. The areas that can stop the market. So Craig, here we go again, brother. Areas that may stop the market. This is an awesome map for what you're looking at on your charts. Divergence high and low lines. What does that mean? Divergence, keep it simple. Divergence is a loss of momentum. And what that means is that if the market pushes up, the buyer's in control, everything's screaming to the upside. If the sellers say no more and it pushes down and momentum does not follow price, that's divergence. It means that the market has a slowdown, a loss of momentum. You'll see a magenta line from a high. You'll see a divergence line or a cyan line from a low. Again, color coding. But the divergence high and low is not a termination condition. It becomes a line in the sand, and I'm going to give you the recipe for recognizing when it may stop that market. We're also going to look for red Fibonacci resistance, blue Fibonacci support, and yellow one-to-ones. These are the areas that are the lines that we're looking for that may stop the market. There will be cases where we look at the mid band. This is your moving average. Just kind of runs through the center of your chart, guys. When price is below a mid band, it's going to be magenta. It behaves as resistance. When price is above a mid band, it's green. It behaves as support. And there's a recipe for knowing when it's likely to hold and when it's likely to break. And I'm going to give you that recipe today. But this is your map. This is what you're looking at. Notice that you've got your momentum indicators, and now we have lines on the chart to determine whether or not the market is likely to stop, whether the areas are likely to break. And you're going to see very often that resistance, when broken, behaves as support. And resistance, when broken, behaves as support. But look at these yellow one-to-ones reverse the market. Resistance becomes support when it's broken. There's one of those tails. Stops the market cold, right? Stops the market cold. So what we're going to do is we're going to go through a simple recipe to identify when we respect the line, when we expect it to hold, or when it may break, or when it's already broken. And I'm going to tell you right now, let me tell you, these areas are where decisions are made, guys. These are where the buyers buy. These are where the sellers sell, right? Profits are taken, positions are entered. Guys, when John Novak wrote this algorithm 27 years ago, he had a friend in the pits in Chicago, and I'm going to tell you, it's awesome. I keep saying I'm going to tell you. I've had too much coffee. I apologize. Um, the guy couldn't tell John where the institutions were buying and selling, right? He couldn't tell them those key numbers. But what John could do is John could tell him, these are where my fibs are at. And they'd go, yeah, you're within 50 cents. You're close. That's good. And John knew that when, over the course of 6 months, when John Novak's fibs showed up at the same place where that pit trader knew that sells were going to happen or knew that where buys were going to happen, that's when he knew Nexgen was where it needed to be. That's when he knew that the software was exactly where he wanted it. And that started the process, the birth of Nexgen. Um, So we respect these lines wholeheartedly. And it's a simple recipe to understand whether or not they're likely to hold, whether they've broken, or whether they have the potential to break. But everything starts with price reaching that area, these dynamic Renko bars reaching that area. And when price reaches an area, decisions are made. Maybe the decision is that the sellers want to exit their positions. Maybe the decision is that the buyers here at Fibonacci support want to enter positions. But the reality is that reactions happen at fibs, at yellow one-to-ones, at divergence highs and lows, and you guys never have to get caught into it. Because if price reaches an area, that's the first step, and your trigger lines don't break through the area, small and large remain above support, this is a termination condition. This is an area that may stop the market, may create an untradeable bounce. And since we don't know what's going to happen, this becomes a huge safeguard for you to sit on your hands and do nothing, to be patient and wait for the reaction. If this area is going to break, if that Fibonacci support is going to break, notice right here, price reaches Fibonacci support, the triggers remain above. Next-gen users aren't doing anything. This is very much a sit on your hands and wait. If both the small and the large triggers get below Fibonacci support, now the area is broken. Now the path is clear. Notice how support behaves as resistance with all the triggers below. Notice how there's odds favorable momentum, and there's that tail on the pullback to resistance that was once support. Guys, you're going to be able to nail that entry at the top of that tail and take it all the way down to Fibonacci support. So the recipe is and always will be, if price reaches an area and none of the triggers are capable of getting through the area, you don't have a clear path. It's not broken. Sit on your hands and wait and see what the reaction is. And then if both the small and the large triggers. So the tail, great question, Craig. Watch this. I'll give you a live chart version of what the tail is. I want you to look at this one bar. Let me spread it out so it's easier. On your large chart, this one bar, the top of this bar is the beginning of your pullback. It'll make sense in rule number 3. The bottom of the bar is right about where your entry is. So what this is when price goes down, can't create a reversal bar and heads in the direction of the trend, these tails are formed. You'll see them here. You'll see them to the downside. All it means is that price pushed up and it couldn't create a reversal bar and it went back in the direction. And Craig, this is what we utilize to catch this entry. We don't trade tails. But what we find is when we have a rules-based entry, this pullback to support lines up with the bottom of that tail. So it becomes a great study tip. And I'll show you how to do that when we get to it. This tail is this pullback. Notice that the bottom of this tail lines up with support and off it goes to the races. This is what we're learning right now. This is the pattern that we're focused on. Small and large get above resistance. It begins to act as support. It pulls back to support with odds favorable momentum. Giddy up. Let's make some money. Cool. So price reaches, no triggers, no trade, guys. That's it. Both small and the large break above. The area is broken. We're looking for that odds favorable. Practice, David. Practice, 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 practice. I know that's not the answer you want, right? Repetition, practice, repetition, practice. Finding it historically, guys, is not hard to do, and that's how you're going to backtest the software, right? That's how you're going to backtest the methodology. And the idea that you can get to where you want to be, that you can catch it in the market live. David, it's repetition. So Nexgen gave you guys a spreadsheet. This is 270 pictures of entries, right? Your job is to fill up this one with your pictures of entries. And David, I promise you, you'll get to the point. Watch how quickly I do this read. I'm going to open up a different chart because we've been looking at this one. I'm in a downtrend. I don't have odds favorable momentum. I have absolutely no trade. I'm in an uptrend. I don't have odds favorable momentum. I'm sitting on my hands because I'm trading into a termination condition. I have odds favorable momentum. I haven't reached that key area. David, this is my area inside of favorable large triggers where the market is most likely to bounce. I kid you not, it will be that fast for you. But you've got to get the repetition. You've got to get those reps in. And you really will. You'll see them as easy as seeing a flat tire with a little bit of study and practice. So price pushes down and pushes back up, creates a pivot. Everybody's comfortable with the idea of a pivot. And this cyan line lets me know that momentum is not following price. Guys, this is not a termination condition. Price didn't reach this line. Price created this line. The momentum, or the lack thereof, creates this line. It's when price reaches this divergence low and none of the triggers break. Now this line becomes a termination condition. If this termination condition, which we call a pivot stop out, creates a full reversal in the market, we're going to identify it as a strong bottom. A strong bottom is the precursor for the highest probability trend trade that you can take to the upside. And then these pivot stop outs will also happen from highs. Pivot stop out at a high. These termination conditions at a high, if they reverse the market, we're going to call them a strong top. And strong tops and bottoms lead the way. This picture reminds us that when everything is going up, price reaches an area. None of the trigger lines break. Next-gen users know not to try to take a trade into that red line. Guys, this isn't necessarily getting you into a trade. It's keeping you out of the wrong trade. Support pushes, or resistance pushes all the way back to the mid-band, all the way back to Fibonacci support. None of the triggers are anywhere near. And guys, this is when a mid-band becomes a termination condition. If I have room to make a full bar back to my large triggers, This is when the midband behaves as a termination condition. When it coincides with Fibonacci support, it's even stronger. But if that midband were floating solo out there, this is what we call the gap theory. There's room for a full bar before it comes in contact with the large triggers. Price very often closes that gap. And once again, it's not getting you into a trade, but it's keeping you from trying an ill-fated short. So it's a protection. And then from support, we run all the way up to Fibonacci resistance. None of the triggers break. The recipe is met. It's a termination condition. We hit that divergence high. None of the triggers break. Termination condition number 2. Alex, it happens on the midband or fibs or anywhere. If it's happening on a fib, you shouldn't be trading into it anyway, right? Because it's a potential termination. But it's that gap that keeps you from trying any shorts in between. It acts like a vacuum. You can literally, if you put your ear to the monitor, hear the sucking noise as it snaps back and pulls into that area. So the gap theory uses fibs, midbands, one-to-ones, anything. And when it stretches so far away from large triggers, it's likely to snap back. It's just a pattern, right? It's a pattern that helps. But we use the gap theory, Alex, and I appreciate your question because if I go back to here, we use the gap theory to identify when the large chart midband is a termination condition. Pretty cool, right? It all goes back to patterns. Thanks for the question, Alex. That was a good one. There are no bad questions. I appreciate all of them. And then price comes up and reaches the second level of resistance. Guys, that's 3 termination conditions in the same area. Only a fool would trade into this, right? I'm not saying you're a fool, but I'm saying only a fool would go long into this termination condition. And guys, when this termination condition creates a full reversal, it's a strong top. And when a strong top gives you odds favorable momentum, and it hasn't reached that next key Fibonacci area, there's one of those tails. There's one of those pullbacks. This becomes the highest probability trend trade that you can take, guys. When a termination condition creates a full reversal, we call it a strong top or a strong bottom. When a strong bottom gives you odds favorable momentum in a clear path, this becomes your highest probability trend trade that you can take. This becomes the absolute best of the best scenario for getting into the market on a high probability trend trade. And I like to take a picture of this picture. I probably have 50,000 of them by this point, but I'm going to show you this one because I think that this is the most important lesson. If I wanted you to learn anything at all, this is it. Even with odds favorable momentum, when you reach an area and none of the triggers are through, sit on your hands and do nothing. We saw that exact same termination condition, I want to say, in the S&P earlier. The market was absolutely screaming. And when I put fibs back on there, it hit them to the tick and reversed. Decisions are made at key areas, guys. This is where the sellers might ditch their position. This is where the buyers might try to move the market. Or, and here's what happens a lot, this is where fights happen. This is where buyers and sellers duke it out for supremacy. And that's exactly what happens here. Nexgen users knew not to go short. Thank goodness. Look at the bounce. And it was too soon for longs. Thank goodness. Look at the fight. No long trades yet. No short trades yet. No long trades yet. No short trades yet. This is the 90% right here, guys. This is the 90%. When your rules aren't met, when you don't have odds favorable momentum, when you don't have a clear path, this is where sitting on your hands is the best thing that you can do. But look what happens ultimately, guys. Let me change colors here. This termination creates the full reversal. The large triggers go from red to green. The background turns green. The smalls are above, but we're still having troubles with resistance. Ultimately, small and large get above resistance. Resistance behaves as support. We now have a clear path coupled with these small triggers outside of the large, and there's one of those tails. There's one of those pullbacks on the smaller, faster chart to get you guys to the next key area. This is your 10%. This is the 10% that gives you the statistical advantage through patterns to entering the market and taking profits at the next key area. Guys, this is where new users build the ability to read a chart. This is where you guys create this foundation that's going to carry you off to the next level. I'm going to talk about one more termination condition, but before I do, is everybody comfortable with the recipe? Let me show you this one. Whoops. I'll show you a couple pictures that I have. These are termination conditions at a high. This is a pivot with a loss of momentum. That's it. Don't give it more power than it deserves. When price reaches the area, there's the first step. Triggers remain below. Now it's a termination. If a termination creates a full reversal, it's a strong top. Resistance, no triggers break. Termination, price reaches one-to-ones, no triggers break. Termination. Guys, give me a why in the room, especially my new users. That's your recipe to know when not to take that next trade into an area. It also happens at a low. Price reaches the one-to-ones, all of the trigger lines remain above, no more short trades. Look at the fight. When this termination condition creates a full reversal, now it's a strong bottom. This is the precursor for the best of the best. Price reaches support, none of the triggers break, no trade. There's a pivot with a loss of momentum, not a termination condition, but when price reaches that divergence low, all of the triggers remain above, now it's a termination. And if these terminations from a low reverse the market, we're going to call them a strong bottom. And the strong bottom is the precursor for the best of the best. There's going to be times where the market seems to turn from the middle of nowhere, when it doesn't reach one of those key areas, when the buyers decided it was time to go up or the sellers decided it was time to go down, but your large chart doesn't give any indication that that's happening. This final termination condition, and guys, this is only on a small chart, the only termination condition on a small chart, is three divergences, three losses of momentum in the same area may terminate the trend. And I want you to notice that I use the words may, likely, could, has the potential to. It may terminate the trend. Three divergences, 1, 2, 3 cyans from a low or magentas from a high, might push that market up. It might reverse it completely. But three of these is a termination condition. Don't take that next short. Don't take that next long. These three divergences become more powerful when, notice how the small triggers have weakened the large triggers. We've gone from odds favorable momentum to anything can happen. It adds fuel to the fire. And then when that third pivot is higher than the previous from a low or lower than the previous from a high, even more fuel to the fire, guys. It's a head and shoulders pattern. And this lets me know that not only is momentum not following, but price can't even match what was going on. This becomes a way for you to not take that final long or that final short, and you're going to see this at a low or this at a high. When your large chart, the slow chart, can't give you indication that things are changing. This is where you're going to see it on that smaller, faster chart. And then as you grow with the software and start working on management plans, this is also going to help you exit trades. Maybe you take that perfect pullback, but three divergences print. This is your let me preserve my equity. Let me not hope it continues down. Let me recognize and respect the three divergences, exit my position, and save a little money. Same thing at the top, guys. So these three divergences in the same price range not only keep you from taking that final trade when things are changing, but it's also going to become a very invaluable management tool for you. So keep it simple initially. No triggers, no trade, no clear path, sit on your hands. Small and large break. Let's look for our opportunities. Let's look for the rules to be met. And guys, termination condition to the tick. Price reaches resistance. None of my trigger lines break. Look at the reaction. Decisions are made at fibs. Odds favorable, there's a pullback, there's your entry. It took you to the next fib. This is all we do, guys. This is our pattern every day. Termination conditions told you not to go short. Termination creates a full reversal. That's a strong bottom, ladies and gentlemen. You can see it clear as day, and we knew that that area was a key area all the way back to the 7th of November. And it's broken, but it's also held. And this is a key number in the crude oil game. And we can recognize that through the relationship of the trigger lines to the area. Guys, we're good, right? Don't trade into lines. And when lines reverse the market, let's look for odds favorable momentum. Let's look for a clear path. And if I have it, you guys ready to pinpoint where that market is likely to continue in the event of a pullback? Rule number 3 says, when I have odds favorable momentum, when I have no termination conditions, I'm going to use a smaller, faster chart. And I'm going to use that smaller, faster chart to take advantage of what the small crowd does. The small crowd fights the trend. The small crowd fights momentum. The small crowd gives me a retracement, a tiny pushback in price counter to the underlying trend. If my rules are met on the large chart, this is where rule number 3 takes place. I'm going to use a limit order to buy or sell a pullback, that small retracement in price, but it's imperative that my pullback comes to an area inside of favorable large triggers, guys. Favorable large triggers means that your large triggers, which are, and let's go back and we'll look live, your large triggers are the smooth triggers. Your synthetic triggers are the stepped triggers. Your synthetic triggers are the large triggers. Watch this. From your large time frame. That's all they are. But the cool thing is that when these overlap, it gives you your best chance of success for that high probability trend trade. It creates what we call favorable large triggers because high probability trend trades happen from areas inside of favorable large triggers. And your areas may be Fibonacci support, it may be a mid-band, or it may be yellow one-to-ones. But it's imperative as a brand new user that you let them happen inside of those favorable large triggers, the two working together. Because the more split division you have between these triggers, the more likely or the larger your window of opportunity becomes. And the larger your window of opportunity is, then the more risk you're going to have on a trade. So when they're one on top of the other, it's a very concise entry point. This pullback to support inside of favorable large triggers, this is the bottom of the tail on that large chart. When there's split, when there's division, these are moving averages, and price loves to correct to moving averages. You're just not sure where it's going to go. It creates more risk. So for the brand new user, my goal for you is that you manage your risk long before you ever manage your profits. And you manage your risk through odds favorable momentum. You manage your risk through a clear path. And now you're going to manage your risk from having an area inside of favorable large triggers on a smaller, faster chart to get you into the market. So let's go through the concept. When everything says up, I turn my attention to the smaller, faster chart. My rules are met on the large chart, guys. And I know that it's time to take a trade, but I'm not jumping in because my rule says that I'm going to use a limit order. I'm literally going to wait for the market to come back to me. And I'm going to have that limit order waiting at an area, fibs, mid bands, yellow one-to-ones, and they're going to be inside of favorable large triggers, like they've been swallowed by those favorable large triggers. But what I need is that small crowd to do their thing. I need a pullback. So I wait for a reversal bar on my smaller, faster chart. I am literally so confident in being able to pinpoint where the market is likely to continue that I am going to buy as the market is coming down. I'm going to create what's called a window of opportunity, or if you're a Ric Flair fan, the woo. Window of opportunity. I hear that every time. My brother coined that one. Your window of opportunity is going to extend from, in a long trade, your highest point of support, in this case it happens to be the mid-band, to the lowest point of support, yellow one-to-ones, inside of favorable large triggers. And I want you to get in the habit of writing on your chart, inside of favorable large triggers, because this is where the magic happens, guys. I'm going to activate a limit order right at the top of that window because my large chart is screaming with momentum, because my large chart has absolutely nothing to create a bounce. My best chance to get into this trade is a limit order right at the top of the window. So I'm going to right click on my chart. I'm going to activate my limit order, And guys, I am powerless at this point. It's either going to get me or it's not, right? So let's go through the entire process in one picture. Large chart leads the way, not the larva chart. Large chart leads the way. Rule number one gave me odds favorable momentum. I'm going to put OFM because you're going to see that all day in class today. Rule number two gave me no terms, which means I have a clear path. Now and only now do I turn my attention to the smaller chart. And on the smaller chart, let's go through the entire process, guys. I wait for the reversal bar. And at the time of the reversal bar, I use a drawing tool or I use my head, whichever's easier for you. And I look from the highest point of my favorable large triggers to the lowest point of my favorable large triggers. And guys, this is not where the market is likely to continue. This is where I'm looking for areas. My window of opportunity for a long trade extends from the highest point of support to the lowest point of support inside of favorable large triggers on my small chart. Can you guys give me a why if you're with me so far? And all my new users, it's like drinking from a fire hose day one. I know that it is. But I'm going to teach you how to practice this as well. I'm going to teach you how to go back and study this historically. Guys, when the market comes down, if it hits my limit order at the top of the window, I'm in a long trade. And I'm in a long trade. Let's go back to why we're in that long trade. We're in a long trade because we had the advantage of momentum via strong triggers, because we had the advantage of a clear path, because there was nothing in the way, no termination conditions. And now we have the advantage of an entry area, that point where the market is most likely to continue. And guys, this is the highest probability trend trade. This is the best of the best. This is the trade that creates confidence through the memory of success. Remember that we created a window, and I want you to be okay with the idea that there may be some negative equity against you as you're going through. But as long as you remain inside of that window of opportunity, I want you to hold fast. I want you to stay in that trade. I want you to believe in the advantages that got you in. But I said it once, I'll say it again. We manage our risk before we ever manage our profits, guys. And we do so by understanding where the market shouldn't go. If we know where it's likely to continue, we know where it shouldn't go, and that is outside of that window of opportunity. Typically 4 or 5 ticks below those large triggers where the market shouldn't be. And if it goes there, guess what? Congratulations, you just took a loss. But you took a loss with every advantage, and I can't stress this enough, guys. Let's write this one on the chart. Yeah, I sure will. But let me write this real quick, guys. Anything that wins 70 to 80% of the time, whoops. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Which means, I'm trying to make this as big as I can for you, David. Which means that if your stop is hit, it's a cost of doing business. Is that a little better for you? Reversal bar prints from the top of the triggers to the bottom of the triggers, refine it down to the lowest point of support to the highest point of support, enter at the top, and get the hell out if it goes beyond it, guys. This is your 20 to 30%. This is your cost of doing business. I'm not here to tell you that you're going to win every trade that you ever take. And I'm going to tell you right now, you won't. And losses are a normal part of a positive equity curve. Let me see. I had one this morning that was a normal natural loss, and I would take this trade 1,000 times. Maybe that was it. I take a lot of pictures. Nope, that was yesterday. I take an awful lot of pictures. I had odds favorable. I had a clear path. I had a pullback to an area of support inside of favorable large triggers. And guys, this one got me. This is a cost of doing business. This is a trade that I took this morning because it fit my rules 100%. I lost the trade, and I'll tell you what, guys, before I started teaching this class, I hit my daily goal. Losses are a normal part of a positive equity curve. You're going to take losses every day, but the key is that the losses that you take are the right losses. They're the losses that happen with the advantages. They're the losses that happen because you had your rules met. It's a normal part of a positive equity curve. So guys, this is your highest probability trend trade. This is the one that you should never miss because this is the one that typically wins 70 to 80% of the time. In the beginning, your live market is going to look absolutely crazy. And it's going to be difficult to keep up with that chart read, which is why we study. Man, I'm looking for see if there was any rules met. Which is why we study, guys. This is why this is your study tool. Let me clear everything. When you have odds favorable momentum, when you have a clear path on your large chart, go back and circle the tail. This one didn't reach the areas yet, but it didn't pull back to Fibonacci support. This one had everything, and guys, that's the perfect trade. Give me a Y if you see it. I circled the bottom of the tail. It lines up right here with support. Stop goes outside of the triggers, and this one carries you up to the next level. Guys, this is all we're doing is we're trading patterns. We're not trading the S&P. We're trading patterns that happen to be on the S&P. This could be any time frame, any market, guys. And this is just my study tool. I'm going to go back. And I'm going to look for odds favorable, and I'm going to look for a clear path. And if I see it, I'm going to circle a tail. And if I circle a tail, let's go back and see what it looks like. And that tail pulls back to resistance inside of favorable large triggers. Once again, guys, there's that pattern repeating itself. We're just learning patterns. You guys want to practice an entry with me? Yeah, you do. Of course you do. Everything starts on the large chart, right? So Craig and Jim and Big Game Biff and Chariot and Matt, guys, play along with me here. Everything starts on the large chart. The background is red, right? So we're only looking for rules to be met for high probability trend trade short. Everybody's comfortable with that, right? Red, look for shorts. That's it. Don't fight it. So we look for odds favorable momentum. I'm looking for separation between the small and large. The large should be wide, angled in the direction of the trend. The small should have that separation. This is my best of the best look, guys. This is the look that lets me know that the market is likely to continue in the direction of the trend. Give me a Y if you're with me. Rule number one is met on the large chart. Rule number two says, and we're only using the most current bar, rule number two says that I should not reach an area. In order to have a termination condition, price must reach an area. Give me a Y if you recognize. These price bars did not make it to those one-to-ones. What does that mean? That means that if I get an entry, these one-to-ones become a target. They're not a termination condition. And I know about them because they've been there for quite a while. So I know exactly where with this much momentum, where the market is likely to go. My smalls and large have broken through support. Support is acting as resistance. I haven't reached. So guys, rule number two is met as well. I have a clear path. Because I have odds favorable momentum, because I have a clear path, I turn my attention to my smaller, faster chart. On my smaller, faster chart, everything says down. My large, my synthetics are beginning to overlap. I see fibs, I see one-to-ones, I see a mid-band, but I'm waiting for the small crowd to fight. I'm waiting for the small crowd to give me a reversal bar. And at the time of the reversal bar, I am going to draw a line from the bottom of my triggers to the top of my triggers. This is where I'm looking for areas. This is where I'm looking for fibs, one-to-ones, yellow one-to-ones, mid-bands. So I'm going to refine it even more. This is, let me make this easier. There we go. My lowest point of resistance is a mid-band. My highest point of resistance inside of favorable large triggers are these yellow 1-to-1s. Give me a Y in the room if you're with me, guys. I've just identified the window of opportunity because I have odds favorable momentum because there's nothing in the way. Your job as a rules-based trader, trading the high probability trend trade, is to put a limit order. This will be your limit order right there at the bottom of the window, guys. Don't trip over pennies trying to catch dollars. And the market starts to come up, and look at that. It doesn't get to my window of opportunity, but I still have odds favorable momentum and I still have a clear path. What does that mean? That means that I'm not done looking. My mid band came down a little bit. I'll drop this, but I'm not going to chase it because if I get in here at 91, I don't have a lot of room to my target. I need it to come from the best spot. Sometimes it's not your money. Don't chase trades. But watch what happens. Goes down a little bit, and before it hits that area, it gives me another reversal bar. My window goes from the mid band. That's really my only line inside of favorable large triggers. So once again, I put my limit order just below, and I wait. And now I'm in a trade. Now I'm in a high probability trend trade. Now I have the advantage of momentum. I have the advantage of a clear path. And remember, all of this nonsense is happening inside of one bar over here. And I can put a stop where the market shouldn't go. Typically, it's 12 to 14 ticks. In this case, it's right around 12. It's 13 ticks. And the market pulls up, and I'm in the market. And notice that it's still in the triggers, but then it gives me a reversal bar. It's going with momentum. It's going with direction. It's going with all these great things. And I'm going to reduce my risk a couple ticks above it. And now I've managed my risk before I ever manage profit. 87.25 is where those yellow 1-to-1s are. And guys, that's what we call bingo. That's taking a win on the highest probability trend trade that you can take. And look at where that window of opportunity lined up, ladies and gentlemen, right at the top of the tail. We don't trade the tail, we trade pullbacks to resistance inside of favorable large triggers. But you can study by going back and circle these tails. Does that make sense to everybody? Because you just saw it. And guys, I don't handpick these. We just scroll back in the market together, right? But you've got to learn to study. So let me give you this picture. I have so many pictures. When the large chart has strong triggers, when the large chart has a clear path, this is it, historical, right? We're just back testing. David, great question. Here, no, let me not take a picture of this one. Let me show you one bar, David, on the large chart, the bottom of that bar. See how when I put the square around one bar, the bottom of the bar is where the pullback begins. The top of the bar, where that tail is where it ceases to go up anymore and heads off in the direction of the trade. So we take the one bar with odds favorable momentum, the one bar with no termination conditions, and then we look to the smaller, faster chart. We get a reversal bar. We identify our areas. Hopefully it bounces off of them. So everything in this box is one bar. And that's that refinement process. That's how we're able to manage our resistance or manage our risk. Does that make sense, David? So the tail on that bigger, slower chart is being shown on that smaller, faster chart. And that's why we don't trade tails. That's why we trade pullbacks. So the top of this bar is the beginning of your pullback. No. So David, I'm going to read every word on this one, and hopefully this clears it up a little bit. Strong trigger lines, no termination conditions, right? That's the large chart. David, all this is teaching you how to study, how to create that recognition so that you can catch it real time. If I circle the tail you can see that on the 5-1 it was the pullback, right? But David, we don't trade tails. Entry rules on the 5-1 show us where the tail is most likely to happen. Do not wait for the tail to form to take a trade. It is long gone by then. This is an after-the-fact study tool to help visualize the best setups for entry with the rules met. So what happens, David, is this becomes your way to prove me wrong. This becomes your way if you're like, that Novak's full of crap, right? This is our entry on the small chart. Right there at support inside of favorable large triggers. Give me a Y if that makes sense. It just happens if, see how it's already all the way up here? This is how we can go back and study it. Right? This is how we can go back and study it. This is how we can develop trust. This is how we can put ourselves in a position through recognition to catch it over and over. So, Chef, ask the question with a picture, please. It makes it easier. So, David, if I scroll back and I circle the tails, like this has already happened, right? I'm just looking to see if rules were met. I'm going back and I'm saying, wow, with odds favorable momentum and everything going up, absolutely, it does pull back to support. And look, that support happens to be the tails. The tails are nothing more than a study tool. So you can go back on any market, right? Here's crude oil. There's no tail at all. Do you see it? This is an active bar. But can't we identify if this market is likely to continue? Well, there it is. It just did it off the bottom of the window, David. Do you see it? Craig, do you see it, Jim? There is no tail yet. This is still an active bar. But the retracement pulled right back to resistance inside of favorable large triggers. There's still no tail. If this bar, David, becomes a down bar, that's when the tail will be evident, right? Right now, all we have is a window of opportunity with odds favorable momentum and a clear path. I'd take this trade every time. And if I got in at 57, if I'm behind the reversal bar, my stop's at 60, 3 ticks. If I decide to keep it outside of the window, it's still only 7 ticks. Hopefully crude oil plays nice and gives us the down bar. We'll come back to it and we'll see what it looks like. But I can't wait for the tail. Have to trade that area of resistance or support inside of favorable large triggers. So odds favorable. Support, no triggers through. Guys, rule number 2 is not met. It's that quick. And since rule number 2 isn't met, I'm not looking for a trade. I don't even have to stare at my chart and hope. I'm just done. That's it. No rules, no trade. And guys, that's the high probability trend trade. That's your focus for the first 20 days. Get in at the best spot. That's it. Just work on entries. Jim, Big Game Biff, Matt, don't worry about being a rock star in your first week. Focus on your entries. Focus on getting in at the right spot. Because I'm going to tell you right now, great entries create manageable trades. When you have odds favorable momentum and absolutely nothing in the way, look at that pullback. This is CAV showing off a little bit. This is 100% rules-based, in, money, boom, bang, done. That's what you're focused on for 20 days, guys. Get in at the best spot. Here's a checklist that you can print out and put on your desktop. Is the market coming from a good top or bottom? Was there a termination condition that creates a full reversal? Here's a video. John Novak talking about tops and bottoms. Watch it. Watch it tonight. This is your homework. If I mark yes, and notice that I don't have to have a great top or bottom, but if I don't, I'm going to use those divergences to manage it. Do I have odds favorable momentum on both charts? If it's a yes, and only if it's a yes, I'm going to. Do I have no termination conditions? And if it's a yes, I turn my attention to the small chart. Do I have an area inside of favorable large triggers? I'm telling you guys right now, I've never had anybody in the history of this checklist, be able to mark yes to all 4 of those and not do better than 70% winners. True story. For those of you that are visual, here's the exact same checklist. What is a good top or bottom? It's that termination that creates the full reversal. Guys, I liberated it from the study tools. This is your odds favorable momentum. It means the odds are favorable for the market to continue up. That's where that clever phrase came from. This is weak triggers. This is anything can happen visually. Take a look at this in the mornings. Make sure you're comfortable. Here's your termination conditions. No triggers, no trade. The path isn't clear. Small and large. The area is broken. On we go. And then this is going to be your second trade, ladies and gentlemen. This is what we call a 50-50 look. When the small triggers break through an area, but the large triggers don't, the area has the potential to break if there's a lot of momentum behind it, but it's not a clear path. It's not a high probability scenario. And then finally, here's windows of opportunities from both short and long. So please steal this. Study it every morning. Look at it. Remind yourself that things happen on 2 charts. And these will keep you focused on the best entry. Keep you focused on getting in at the area inside of favorable large triggers. Oh my gosh, look at that, guys. David, there's your tail, brother. There's your pullback to resistance inside of favorable large triggers, ladies and gentlemen. This is live. If you were in at 57, that's a good one. See how that happened though, David? We didn't see the tail in the moment. That tail happened at the area of resistance inside of favorable large triggers. I had Fibonacci resistance right here. This circle goes from my highest point of resistance to my lowest. I'm a tick or 2 below resistance. And with all this momentum, this blue fib represents where the market is likely to go. But to see how there wasn't a tail? Area of resistance inside of favorable large triggers. Guys, this is why, that's okay, don't feel dumb, feel new. There's a big difference. There's a big difference. So let's go through the entry, David. Let's do it together. Cool? Odds favorable. Notice how the small and large are below support. It's behaving as resistance. Let's get rid of this circle. Rules met, right? Let's go. Let's look for a trade. That's solid. Are you comfortable with that? That's the first part, guys, is making sure that the large chart says. Awesome, Freddie. I'm telling you guys, I'm going to say the same thing 1,000 ways, and one time it's going to click. Big chart you get. Okay. So the rules are good. Everybody sees it? What are we waiting for on the small chart, David? I want you to use the language. The language is so important. In order to take a trade, I need a pullback to an area inside a favorable large trigger. So I want you to write that down on a piece of paper. What begins the pullback? The reversal bar. I love doing this in class, guys, because it's not just for David. This is for everybody. Rules met on large chart, right? Step 1. Wait for reversal bar on the small chart to signal a pullback. I'm going to give you guys all these pictures. So there's step 1. Step 2 is identify your favorable large triggers. And that's it. Step 2. I should have done this a long time ago. So, David, I owe you a beer next if we ever bump into each other. Step two is identify your favorable large triggers. Is everybody with me so far? And we're just going to use the live market here for these examples. Steal these pictures, please. Steal them. All right, step three is create your window of opportunity from the lowest point of resistance to the highest point of resistance. So let's take the picture. I will, David. From the lowest point of resistance to the highest point of resistance inside of favorable large triggers. So, whoops, I had a fib down here. Or got messed up my picture. So what is resistance? This is just a short trade, right? Resistance can be red Fibonacci, red Fibonacci. It can be magenta midband. It can be yellow one-to-ones. The key, your window is from the closest resistance to the farthest resistance inside of favorable large triggers. Does that help a little bit? So we're looking for red fibs, we're looking for magenta magenta midbands, and yellow one-to-ones. And then let's put the note on there. These are outside of triggers. Nope, we're not using the trigger lines, David. So this is where it's so important to embrace the language. Areas inside of favorable large triggers, not the trigger lines, right? We identify the trigger lines so we know where to look for the areas, but we're looking for the actual areas that fall within the trigger lines. And then we're going to activate a limit order and vice versa for support. Absolutely. Yeah, Alan, I missed that in the picture. Here, let me do this. Hold on. That's why I put the white box there. All right, so there's what step are we on? That's step one, step two, step three. Yep, I got it, Alan. Thank you. I missed it on the first picture. So step four, guys. Step four is put a limit order one or two ticks below the lowest point of resistance and pray. Sorry about that, Chariot. Thank you. You've done all you can do. Guys, this is how you determine your entry. This is your entry. David, man, I owe you big for this one. Whoops. Let me actually put the picture in there. And then when your limit order's there, a tick or two below that lowest point of resistance, David, you're just waiting to see if it gets you. There's your entry, right at 57. I'll read it again, Chef, too, when I get back to it, and I'll see if I can figure out exactly what you're talking about. But did that help? And let's do the final one, right? Your prayers paid off. You are short with odds favorable, no terms, area inside of favorable for entry. There's that last one right there. And then at this point, it's just, that's it. That's your first 20 days, guys, is finding the entry. And off it goes, right? What did it end up doing? Hey, look, it made it to Fibonacci support, and then three divergences printed. But the momentum carried you to Fibonacci support. And that's exactly what we're getting at. The large chart leads the way. And what did it do? What did it do after? Oh my goodness. We got a big ugly bounce. It took a little extra push, but sure enough. So, David, the idea, and let's back it up just a little bit so that we can do it. The idea is that you can study entries by going back and circling a tail and seeing the correspondence between the two charts. So all the tail is an opportunity for you to scroll back 10 days on whatever market you're looking at. So you don't have to be live in front of it, but you can build that recognition. But what I need you to do is every time you circle a tail and the rules are met. Oh, you know what, David? So when I started trading the software, when I started learning the software, my brother had one word that just stuck in my craw and I hated it. Is he would say, it's obvious, it's obvious, it's obvious. And it's not. Until you get the repetitions in, it's not obvious. That's why you have to practice. But David, you're probably like I am, where if someone handed you a baseball bat, you just went off and hit a home run, right? And if someone handed you a football, you didn't seem to have trouble running for a touchdown. And in high school, you probably didn't study. And all these things, you get to where trading takes a little bit. It's a different set of rules and dynamics. And for me personally, if I'm not great at something on day one, I start to get frustrated. And I get even more frustrated when I see other people having success with it. But the problem is you have to remember that the people in this room that are showing you these great trades, they did exactly what you're doing right now. They went through and they studied over and over. So go circle those tails and write the rules on it, right? And then put it in your personal trade setups. And what you'll find is that this is exactly what you're looking for. And being able to find it when the market isn't moving makes it easier to find it when the market is moving. There was an awesome interview with Tom Brady, and he was the second half of an interview, but they were interviewing college quarterbacks that made it to the pros. And every college quarterback was like, holy crap, it's so much faster. It's so difficult to read, to do all the things that I'm used to doing as a quarterback. And then they pan over to Tom Brady. He goes, it's like slow motion at this point. I have so many repetitions and I've seen it so many times that the thought process isn't there anymore. And what you'll find, David, is you'll do these great reads and it'll take you all of 3 or 4 seconds, but fill up this section through circling tails, through writing rules, guys. Because the more you write on a trade, the more pictures you take, the easier it becomes. And everyone does learn differently, but I've got a way to keep you focused. So, um, Jim, Matt, all you guys, I want you to steal this and I want you to commit to it for the first 30 days. This is the KISS plan, the Keep It Simple Sunshine Plan. Thank you, Bobby T. And this is a stepping stone in your learning path. It's designed to optimize your chances of success with that high probability trend trade and that 50-50 trade, that area with the potential to break trade. But it's through simulation, study, class feedback, and continuous practice. You're going to make a plan that's tailored to fit your needs. You're going to see your patterns that speak to you, that stand out to you. Um, and just like everyone else in this room, it's your ability to read your indicators that's going to help you create your plan. What makes you feel the best when you're trading the market? But this one is a simple plan for consistency because confidence comes through the memory of success. So keep it simple, right? Don't make too many thoughts. If you never fight the large chart direction or triggers, this is literally in the plan, guys. It's going to eliminate 60% of the problems that most new users have. Take 30 days to define your entry, and that's what the class is for, David, is every time, and I'm going to show you a picture from this morning that exemplifies that. You're going to define your entry because when you get in at the right spot, mechanically, pragmatically, it creates a manageable trade. So the second step becomes the management for the trade, right? Once you're in at the best spot, you got to do something with that great entry. So on the KISS plan, it gives you the same approach, mechanical, if then, methodical, and it all stems around your ability to get in at the best spot, to get in at the area of resistance inside of favorable large triggers. And once you do, your stop goes beyond the window. And if it gets hit, whatever, cost of doing business, all those advantages were great. And if it doesn't get hit and the market blesses you with a reversal bar in the direction of the trade, you're going to manage your risk. You're going to drop that thing down. And you are going to have less risk on a trade and it still might get hit. But now you're going to lose less and being able to manage a trade is huge. And then it's either going to stop you out or it's going to hit the first target. If then, if I get the great entry, then my stop goes up here. If I get the reversal bar, then my stop gets moved here. If I hit my first target, then my stop goes to break even. And guys, this is amazing because you just got paid. You just got money in your account and you have zero risk. And it's this right here, guys. This break even stop's going to get hit all the time as you learn to read your indicators. You're going to have a lot of $100 trades, but you're on simulator. You're focusing on entries and you're learning to read indicators. But this break even stop makes it easier for you to hold for the second target. It makes it easier for you to trust odds favorable momentum. It makes it easier for you to trust the clear path because you have money in your pocket and nothing to risk. And guys, if it hits the second target, it's only a $200 target. That means that you just won $300 and got out of the market. And $300, if that's the best you can do a day, $150 a day, guys, you can, or per contract a day, you can build an absolute career off of that because that is $1,500 every week. And that becomes $6,000 a month, and that becomes $72,000 a year. And then when you're so comfortable with this pattern, you don't have to start searching for more trades. Double your contracts and keep it the same. Double your contracts and keep it the same. Guys, let your money create more wealth, but do it from having a statistical advantage each and every time you get into the market. And don't be in a hurry. This is a marathon, and it takes time to recognize patterns, just like anything in life. So pragmatic entries, mechanical entries, methodical entries based on a statistical advantage, pragmatic management. And then once you learn how to do it very methodically, every chart that you post in the room becomes a conversation between the two of us. Every time you manage out of a trade, we're going to talk about why you could have held. This is, what is this? This is an S&P trade I took forever ago, back in 22 into the year. And the rules are met for my short, and I took profits all the way down. But because I had strong triggers, because I had a clear path, I knew that that last contract should come off, not at $300 or $200, but down here at $700. And I'll tell you right now, guys, that momentum won, and that one was a huge winner for me. I still remember it. It was a lot of fun. But every time you post in the room, it becomes a conversation. This was posted by a client. Here's my great entry, and I jumped ship right here at this blue line. So the conversation we had was, hey, check it out. With all this momentum and this clear path, why not take it down to the next fib, right? Because that's exactly what it's telling you. And if I'm not mistaken, this is the exact same trade. Nope, but it looks exactly the same because patterns repeat themselves. So guys, keep it easy, keep it methodical, take pictures of everything. If you take 75 pictures or 15 pictures a day, that's 75 pictures a week. And 75 pictures a week turns into 300 pictures a month. And I'm telling you right now, guys, if you keep taking pictures, if you keep stockpiling and annotating pictures, I'm at 67, 66, 60. Oh gosh, it's the devil's pictures. But I've got some crazy good recognition. And let me show you how I like to take pictures when I trade. I take pictures and I annotate. So we're going to walk through a crude trade that I took this morning. The large chart started with a termination that created a full reversal. This full reversal gave me odds favorable momentum. This odds favorable momentum gave me an area with the potential to break, but it's not broken yet, which is why I typed 50-50. Since my triggers are split, not favorable, my window is bigger, and I know that two divergences on my small chart typically takes out this previous divergence low. This is recognition through patterns, guys, where I've gotten with my chart reading. So my entry is right there at that divergence low. You can see that I took my entry, it gave me a reversal bar, and I managed my risk. I had $140 of risk on this trade. And my first target is my trouble spot, that area that hasn't broken yet. When it reaches my trouble spot, I still don't know if it's going to break, so I go to break even. But these strong triggers and this good bottom says, let's look for the next level. I have a target where the market is likely to go. As everything is running up, at this point, I just trust momentum. And I'm not willing to give it all back, so I lock in a little bit, 60 bucks, whatever. But my triggers say we're going to the next level. And sure enough, we did, guys. And I took my profits where the market was likely to go. And I don't care who you are in this room. If you start with this, you can do this. You can take these trades. You can take these entries. You can learn to manage them. And you can become a confident trader ASAFP, guys. But keep it simple in the beginning. Use that KISS plan. Focus on the best of the best. And that's my first hour, ladies and gentlemen, but it went to an hour and a half. I know I have a lot of new faces, and it's important to me that you guys don't get left behind. So, I'm going to ask, is everybody okay with the concept of the high probability trend trade? Is everybody okay that when you have odds favorable momentum, when there's absolutely nothing in the way, all we have to do, no, David, that was the perfect hijack. All we're doing is waiting for the pullbacks to get down to the next area. That was resistance inside of favorable large triggers, but those were split triggers, guys. This was a higher risk trade. But see how I circled the tail? Looks like we had a tail here too. Let's see what happened. Back to the mid band, but not inside of favorable. You might learn to take this one. You may not, but it doesn't fit the rules. So guys, this is what we talk about every day. Big Game Biff, you doing okay? Michael, Chariot, Jim? Talk to me, guys. Let me know if there's a concept that we should go over a second time. I'm always willing to do it. This classroom is for you. This classroom is 100% yours. My first hour is typically a lecture. My second hour is going to be a discussion, guys. And what I'm going to do is I'm going to click on every chart that's been posted in this room. And I'm going to take every one of those charts and I'm going to relay it back to momentum, clear path, and an entry. Whether it's a high probability trend trade, whether it's a medium probability 50-50 trade, if it is an edge trade, an HVA trade. But it's imperative that you guys understand that I'm not looking at what market's being traded. What I am looking at are the patterns that are being presented. Sure, Sydney, I'll talk about it. Good bottom, strong bottom, right? Odds favorable, everything says up. I take my entry. This was the first entry. Didn't work. Got another push. From this push, I entered at what's called a pivot stop out. And this is more of a, this is something that happens when you learn to read your charts a little more. The expectation on the large chart is up because of momentum, because of this. If it doesn't go, remember that fibs are where decisions happen, Sydney, you remember that? This is where sellers and buyers are going to fight. That's exactly what happens right here, is the buyers and sellers are fighting. But because I've got 6,000 pictures, I know that with this strength and this good bottom, this right here is the best spot for me to take a shot at this trade, for me to risk my money on going with momentum, going with direction, going from a termination condition. Next Jim Forbes is in here checking up on me. So I take my entry, and because of the momentum, we rock start all the way up to resistance. That's it. It's a medium probability trade because the area isn't broken, but it still is just, it's letting the large chart lead the way and refining the entry a little bit. So this is what we do, guys. We're going to go back and we're going to look at all your pictures. We're going to talk about the advantages. Just because it's somebody else's picture doesn't mean that you can't talk about it. I'm not going to say, look at this crude oil trade, look at this NASDAQ trade. I'm going to say, look at the patterns. Did our indicators give us momentum, a clear path, and an entry area? We're going to celebrate the victories. We're going to talk about what needs a little help. And it's that repetition that's going to get you guys to where you need to be. We've learned the rules. You guys are going to simulate and practice. New users, I want to see your practice every day. I want to see what you're doing, what you're trying. Post your trades in class. It's how you become a confident trader ASAP. And we want you practicing the correct rules. Don't set yourself up for long-term failure. We simplified. We kept it focused on the high probability trend trade. I gave you a plan at the bottom of the KISS plan for those medium probability trades. And remember, it's super simple, but you got to learn the looks so they become easy. And that's what we're doing through recognition, through repetition, through taking pictures, through annotation. So every time you take a picture, write on your chart. Write your rules. Tell me what you saw. Tell me why you did what you did. Guys, I took one trade, and I'm telling you, you want to get smart fast? Take pictures of your entry, of why you did it, where you did it, what the conditions were. Take pictures during the trade. Take pictures explaining why you're doing what you're doing. Take pictures of where you expect it to go, what's going on. Guys, mid-trade, before I hit my target, my stop is all the way up here. I'm not willing to give it back. There's something, I use a market flow chart to help with my management. That's a third chart that you're going to add. This is what John Novak teaches. If you want to know how to hold for bigger moves, guys, John Novak is your guy. He teaches seminars privately. He gets 3 or 4 of you in the room, 5 in the room. But this is my coaching coming in from my mentor, John Novak, making it so that I could hold this trade all the way up to Fibonacci resistance. So I take all these pictures. This is how I get good at what I'm doing. And the cool thing is I make mistakes, right? We all make mistakes. Oh, and I was looking for my example. I took a trade this morning that I thought was a great trade. I even posted it in the room. I was like, man, I moved my stop in the wrong spot. And then I got coaching from John Novak privately on why I shouldn't have taken that trade. And it kept me out of my next loser. And that's what we do here at Nexgen, guys, is I look at everything that you do. We talk about it, and let's try and keep you out of that next loser. Let's keep you out of that less than optimal position. So I'm going to take 5 minutes. I want you guys, I know new people, you have a lot of questions. I want you to start dropping them in the room. If you took trades, I want to see pictures. If you're not comfortable with using your TechSmith capture yet to take pictures, let me know. We'll do a tutorial on it. But when I come back, we're going to take a look at all your pictures, guys. Thanks for such a great first hour. I'll be back in 5 minutes. Sorry, man. Had to stretch my legs. It happens every now and then. What's the live market doing? Divergence low, no triggers through. Nah, that's okay, man. We're not going short, right? Because this is an area that may stop the market. No triggers above the areas above us. So, you newer guys, you ever been caught up in consolidation and you just try to predict, is it going to go up or down? You don't have to anymore with rule number 2. You don't have to get caught up in a market that's going sideways because look at this. No longs, no shorts, no rules met. And you guys can identify that instantly through rule number 2. I love when that happens. Let's get all my old drawings off of here, right? Look at the bounce that support created. Kept you out of that loser on the short side, guys. And then, holy smokes. Somebody forgot to tell crude that the news said that it was going up. If you listened to the news yesterday, they said that crude prices are rising. This is why I don't trade news, because the news is full of crap. I trade patterns. Odds favorable, clear path. It's a little outside of resistance or outside of favorable large triggers, just a hair. Some of you may take this one, some of you may not. But I didn't have an area inside of favorable large triggers, which means that I didn't have rule number 3 met, which means that it's a medium probability trade if I choose to go short. It's no longer high probability, and that's how quickly that read happens. So maybe I wait for a little confirmation, a little reversal bar or something. They're storing a lot of fuel in the Ukraine. Right on. I'll tell you what, that has zero effect on my trading. I mean, none. I trade momentum, a clear path, and an entry area, and that's it. It's easier that way. All right, I'm scrolling up to the very top, guys. We're going to go through and start looking at the pictures that you guys have posted. Gary got us going today. Gary said when everything is down and it hits a termination condition, he's just not going to do anything. He's going to sit on his hands and wait and see what happens because he knows that he doesn't have to be first. He also knows that when there's a strong bottom, I love this picture. So Sydney, here's that exact same picture. Craig, Michael, Jim, guys, this is one of our clients, Gary, go Navy, taking the exact same one that I took because of the strong bottom, because of the odds favorable momentum. He gets in on the reversal bar, and because he did the exact same study that I did, we have almost identical trades. We're in different parts of the world, right? We travel in different circles, we don't have the same friends, but what we do have is the ability to recognize patterns. And we caught the exact same pattern for the exact same result. Great trade. I have to say great trade, Gary, because I took the same one. Now I'm going to scroll back up to the top, and I'm going to click on more pictures, guys, and we're just going to keep doing this all day. We're going to talk about advantages. We're going to talk about disadvantages. Gary, divergence on the 5-1 causes reverse bar on 13-2. No, it doesn't. You have momentum. You have areas inside. This one doesn't work, right? Everything says up. The momentum is the strongest. One divergence on your small chart, guys, cannot change the course of the large chart. Just doesn't happen. It takes 3 to do that. But a bunch of sellers that want it go down can. Gary says, whoop, the sellers took control and things rolled, and he takes an opportunity to go short. I'm not sure exactly. It's pretty much a medium probability trade. The large triggers are above. The small triggers are below, the momentum is there, and it's a pullback to resistance. I hope that one worked out for you, Gary. It's a good look. I lost the long going into it because it fit my rules. All right, Chef. That simulated Rolls Royce. Chef says, I've got tons of momentum. I've got a beautiful entry, like a sniper, no divergence. And then there's your trouble spot to manage the trade, right? Why so much risk, Chef? You've already got a reversal bar. You know you have a trouble spot. Everything's doing what it should do. Why leave the extra money on the trade? Just curious. You moved it after the pick? Cool. And just one contract is what you're trading? Good job. This is where I love two contracts because I get paid at the trouble spot. Okay. One contract keeps you very much in an all or nothing mentality, though, right? Um, 45-minute workday. You weren't willing to give it back. I love it. I love two contracts. I'm a huge fan of two contracts because from 30s, from 95, right here at 97, Chef, you're $600 in the bank on those six accounts. $600 in the bank and break even on six accounts. Remember that we're in this to make money. Wouldn't it suck if that termination condition won? Awesome trade, Chef. Great job. I love it. Here to get paid. Should put that on coffee cups. We are here to get paid. All right, who's next in here? And guys, notice how with all the momentum, he's willing to trade into a trouble spot because momentum fixes things. Momentum breaks things. Let me see where we're at. Who's next? And guys, I have to scroll to the top and the bottom, so sometimes I might miss a question. All right, Alex, you have odds favorable momentum. It's a 50-50 trade. The smalls are through, the large are not. There is no divergence and strong triggers, so you get in at the area, and it doesn't work. I'd buy the merch. Alex, the only thing that I have to say about this one, and I'm not sure if you're still in here, so guys, let's talk about patterns real quick. Not coming from a good top is the only red flag on this trade. It's the only red flag. So when the market's working its way up and we're not, yeah, I know. I'm with you 100%, Alex. But when I love the trade, but I have to point out the good and the bad, right? I have to point out what the challenges might have been so that you guys can make an educated decision on whether or not you want to take this trade in the future. When it's not from a good top, very often a mid band or an area of support there can hold, right? And when it holds, it can create a problem. And the market loves to continue the move up or down, whichever way it is. So when you come into a 50-50 scenario from a bad top, you have to be careful. You have to be very aware that this is a lower probability as far as 50-50s go. When you have a strong top, it's more likely to break, and that goes back to the look that Gary showed us. When you're coming from that strong bottom, this area is more likely to break than not a strong top. The chances go down just a smidge. And I love your look on the 5-1, but you're not trying to break 76.69. You're trying to break 76.69 and 76.61. So you're trying to smash through an 8-point range on a 50-50 trade from a bad top. I would still probably take this one, but I would be very cautious. I might wait for a reversal bar or some sort of confirmation, but I think you followed your rules beautifully. And this is where you guys will see when we talk about that KISS plan, that 50-50, notice that it says one area not broken, but we're looking for a good top or bottom and no divergence for your highest chance of success. Alex, you took a beautiful shot at it though. Good morning, Paul. All right, let's find the next one. Scrolling up and down, guys, scrolling up and down. So if there's a moment of silence, it means that I got confused and lost my spot. And then Alex, when the 50-50 doesn't work, what an amazing recovery. Odds favorable, high probability, easy money. It's always nice to see when the market goes, Alex, dude, we're sorry. That's our bad. That was a good look. It didn't work. Here, why don't you take this one that fits your rules beautifully and get paid? That's awesome. So you're up $100, right? Two trades, up 100. It's like this one never even happened. I love it. Beautiful trading. And then newer users, let's use Alex's as an example. Do you see how that works? Odds favorable momentum, nothing in the way, reversal bar, pull back to support right there at favorable large triggers. Look at his entry. And I want you to see just how powerful the methodology, just how powerful what we do is. When this market started going up from that amazing 82 entry, he had about 4 ticks of risk on it. It's like a sniper. He buys it on the way down because the large chart says go. He buys it on the way down because the large chart has a clear path. And Alex, this is spectacular. I want to do what you do. All right, who's next for me? Luciano. Luciano says, if Alex can do it, I can do it. It's the exact same entry. Two in, one out, and then Luciano took the same long. It's beautiful. It had every advantage. So you made a little money, lost a little money. Notice how those triggers start to split. Creates a little extra risk on it, but man, great trade, Luciano. Rules based 100%. First one, perfect. Money on the way up. Second one, the rules are met 100%. It just didn't work out. You caught your 80% and your 20% in the same breath. And then Sydney, I love this. Support holds, everything says up, and Sydney is taking the Ron style trade. And then when it's all funky over here, you say, let's wait a minute. Sydney, solid, brother. Nice trading. And then the same thing, guys. Odds favorable and a clear path sure makes for an easy trade. Nicely done, Sydney. It's cool how, and guys, Sydney's been with us a month, right? Oh, did it, Chef? Which one? It did create a tail, you just didn't wait for it? But you're not getting in when the tail is created. 916 on the ES. Let's take a look at it. Because you had the question. Let's make sure we get the lesson. Woo, NASDAQ is ugly. 916. So it was this one right here. Let's go back and look at it. So you're telling me you got in somewhere up here where there wasn't a tail. You jumped in at the top? Because there's the top of the bar. There's the bottom of the bar. And there's your rules-based entry right in between the two. Oh yeah, you jumped in at the top. It was making a reversal bar to get you down to your entry. That's okay. No, this is great. This is why we wait for the reversal bar. So, and this is why it's so important, I think, to be comfortable with your rules. You have to wait for the bar, right? And then create the window. What area were you trading off of, Chef? Was it a fib, a midband, or a yellow 1-to-1? Clearly they are in stealth mode. I kid, because you've been around long enough. I feel like I can. So not only did you not wait for the reversal bar, you also didn't wait for the pullback. And the cool thing is that you put your stop right above support inside of favorable large triggers. Chef, I need you to just stand up from your desk and go run a lap. Breathe deep. You had the right idea, you just got jumpy. Great pictures, though. Thank you. Because that's a great lesson, because I promise someone else has done that too. Someone else has done that too. Let's see where we're at. Cav. Cav testing. Everything says up, and you take a pullback to support, and then Cav, small triggers are a full bar away. Way to take yesterday's lesson and capitalize. Oh, are you there on business? Or are you just hanging out? Or is that where you're from, Chef? I'm just curious. On business? Right on. Hey, Cav, are you in here? That's the one we talked about yesterday, right? That's perfect execution, my friend. And then when it comes back, it's just a rules-based trade. And you killed it all the way to fibs. I love it. Did you get my messages yesterday? I took like a series of pictures and sent them over to you. Okay, cool. Guys, if I know you're working on something, don't be surprised if I send you pictures that'll help you on your journey. I like to help. Makes me happy. Debbie stopped herself out of this one. Let's see, Debbie. Oh, Debbie, this is so unlike you. Everything says up. Everything's cruising to the upside. The momentum is overwhelming. You take the perfect entry and you chum the water with a stop. Because at this point, if this pulls back to support, we're going. Look at that. They got you on the low tick, too. That's just some dirty, low down, no good. Um, Cav, I think it's cool that you want to learn it. I'm going to tell you right now, guys, you don't need the NASDAQ to be successful. Um, I started trading the NASDAQ because my brother got all excited about it. Oh, there's more options and there's going to be more trades and I'm going to be in more and I'm going to make more. And that's what everybody thought. And then what it turned out, and I hope that your mileage varies, is that people found that they would begin to create trades that were not trades because they had this opinion that that was a market that that was a market that needed to be traded because they saw John Novak trading it. So they started trading it without doing any research on it and getting the ever-loving crap kicked out of them. And guys, that's an autobiography. That's what I did. So what happened is because we thought there should be more trades, we began to fabricate more trades and we stopped trading the rules and it kicks our ass. All that to be said, guys, just stick to your rules no matter what market you're trading. It doesn't matter. Just follow the rules. If you follow the rules, life tends to work out pretty good. Let's see if we get an exhibit A. Everything says up, the momentum is great, the pullback to support is beautiful, and there's some profits. Outstanding. And then check it out. Cav, your small triggers acted as resistance, scared the ever-loving crap out of you and pushed it back. Nice trade. Nice trade. That was the lesson. is watching those small triggers. And then Cav, once again, small triggers a full bar away. You get into the area. Off it goes. Absolutely outstanding trading. Alan, small triggers a full bar away. Doesn't even matter because it's crude oil and it's just beautiful. And yeah, maybe managed out a little early. Alan, nice trade. Guys, the same one that we did bar by bar and annotated all those charts on, Alan caught it and got paid on it. How did Alan know to do that? Repetition, recognition, doing the same darn thing over and over. Everything says down. The entry is perfect. Take some profits. Got scared out. And then you exited the second position early. You had to leave. I love it. I think I took the same trade. I did take the same trade. But I had woken up and opened my charts right here and went, crap, it's going without me. And I literally said that over a cup of coffee. Crap, it's going without me. And honestly, I got a pretty crappy entry too, but I held mine down to the next fib. Thank you for that, Calf. I'm passionate about teaching, guys. I absolutely love it. It thrills me to death to be here every day. It really does. I don't feel like I'm working. Everything says down. Safia goes down, gets paid. Area clears, pull back. She enters, gets paid. Area clears, pull back. She gets paid. Pulls back one more time, gets paid at trouble. Safia, I'm exhausted just having looked at your chart. Can't we just do this? Everything said down and the path is clear. Safia got paid a lot. I love it. Large chart led the way the whole time, didn't it? Large chart always told you that that market was more than likely to go down. Large chart always said, look for your opportunities to get in and manage on a small chart. And you're not messing around, mama. You're like, I'm going to get in here, but I'm going to get paid at this line. But I'm going to get back in, and I'm going to get paid at this line. But I'm going to get back in when that line breaks, and I'm going to get paid at the next line. I love it. Mama's going to have somebody to carry it for her, too. Great trading, Safia. Absolutely beautiful. Guys, none of these are high probability trend trades. Every one of these is relying on momentum and a clear path to get to the next area. She just double dipped and capitalized all the way down. Not bad for a year into it, right? 11 months. It takes a minute to get your mojo down. It really does. It takes a minute to get your mojo down. Once you get it, though, feels pretty good. Let's see what we have. You lost this one. Took a chance on the momentum on the 13.2. Took a pullback on the 5.1. Got run over. And Cav, was this you, Cav? I think so because of all the gray, right? Can I do something? Can I play with your chart real quick just for the sake of learning? When I talk about areas with the potential to break, strong, crazy, odds favorable, oh my goodness, I can't believe the momentum in the market. Holy smokes, look at that separation between the small and large. This is what breaks areas, Cav. And for everybody, that's what breaks areas. The the idea that make it bigger. My triggers are weakening. My small have eked barely. Ah. through that area, through a couple areas, right? This will kill you 99%, 60% of the time it kills you every time, Cav. And then I want you to notice just a little subtlety on your small chart. One, two, three, four divergences as you come into this area, right? Four divergences coming into this area. Anything can happen, triggers. It's just, man, this is and correct me if I'm wrong, this is the dag nabbit. I didn't make more on the way down, so I'm just going to hope that this exhausted market gives me one more push. I know because I've taken that one, right? So just this is the one that we want to pull out. This is the one that we want to get out of the equation because whatever you lost here undid the brilliance that you executed here, right? You're like, man, look at me make money. Oh, let me break my rules and give it back. And I think that's one of the biggest things for day traders is it's not the wins that make you rich, guys. It's the ability to avoid the unnecessary losses, the ability to not take the ones where the advantages aren't present. And that's why I talk about advantages so much. Clear path, odds favorable, price clears trouble, Ron takes it, makes money. Great job. Not a high probability trend trade, but an outstanding chart read to be able to capitalize. And I hope that made sense. Take a lesson, new traders. Your mind sees greed. It does. It does. That's John Novak's old thing. If you walk into the bank and you yell, "Give me all the money," you get tased and hogtied and hauled off to jail, right? But if you walk into the bank and you go, "Hey, just give me my money, please," you typically walk out with cash. And that's what Gino did here. Give me my money, please. That's what Ron did here. Give me my money, please. That's what Alan did there. That's what... Nope, Chef tried to take all the money. He got hogtied and tased. I don't remember whose that was. Sydney said, "Can I have my money, please?" My money, please, right? Alex did it. So keep that in mind, guys. Every time you take a trade, are you acting in your best interest? Your best interest is having all those advantages over and over. Your best interest is always having the advantages. You just got to take a little time to learn how to recognize them, right? That's all it is. And then Cav, going for that momentum. Odds favorable, clear path, little stab back. Um, should have gotten out. Amen. Um, for those of you that are relying on momentum for entries, momentum in, right? Loss of momentum out. It's funny how we do that. And this is so normal. I'm going to take a momentum-based trade. I'm going to take a trade that relies on the momentum. I love it. So what does divergence mean? Like, just if we defined it in its most basic term, what's divergence? It's a loss of momentum. So if the giddy up gets you in, let the slowdown get you out, right? And that's totally cool. And then you hang out and you figure out what's going to happen over and over here. But this is why I didn't take Ron's trades for the longest time, Cav, is because I couldn't work my brain around the proper stops. I couldn't work my brain around the correct profit targets. And I ignored the ever-loving snot out of losing momentum in a momentum style trade. And then the better version of this one is up here, just as it clears the areas, because it gives you room for decisions to be made, right? You clear the areas, and then it gives you a little bit of time before the buyers start getting a little frisky. It's a great look. Awesome entry. Just needs a little love on the management side. And then Paul, Everything said down. The path was still clear. You take the pullback to resistance inside of favorable large triggers. Make money. Make money. Guys, this is the same one that we did um, all the way. And then, Paul, you take that final exit down here. You're like, all right, I give. That's too many divergences and weak triggers. Beautiful trade, Paul. We actually did the bar by bar on this one in class. How we doing, everybody? You guys feeling good about it? And then weak triggers, divergence, no areas inside, and there's your loss, Paul. I'm starting to see a pattern. Why do we put so much faith in weak triggers? Why do we put so much faith in anything can happen triggers? Why do you guys think that is? Anybody? Do you think it's because we just want to win, right? Greed, hope, whatever it is. But identify it. Identify what it is in you that makes you ignore weak triggers. Identify what it is in you that makes you ignore divergences and weak triggers. And then, Paul, I'm not saying that this isn't a good look, right? Gino, amen. Because you don't want to miss it. You want to get in early. We've been talking extensively of when it's kind of a meh look. Why not wait for a reversal bar? Why not wait for someone to push it in the direction of your trade? If you're not going to have momentum or an area inside of favorable large triggers, do something because you're not in control, right? There you go, Ron. This guy's in control. This guy moves the market. This guy creates the momentum. This guy reacts to the areas. This is the guy that says it's okay. This is me right here, guys. I'm a remora. When this guy eats a tuna, I get a little tuna fish, right? When this guy eats a surfer, I get an ankle bone. But that's all I need. I just need a couple small bites. Let this guy take the risk. Let this guy establish the momentum. Let this guy react to the areas. And then when that guy has done his job, right, I'll get in and I'll take a piece. But here, his job was done. He was exhausted. He beached himself. He lost his teeth. You guys see the difference? Notice how if you put the rules, momentum, clear path, and entry area up against the chart, no momentum, no entry area. 2 out of 3 are gone. Let everything you do revolve around advantages, and you will be absolutely flabbergasted at how many fewer trades you take. You will be absolutely floored at how many times you are unwilling to buck the system, right? It's kind of cool how it works out, guys, but it means that you have to sit on your hands and do nothing a lot. It means that when crude oil goes from a pivot stop out at support and gives you odds favorable momentum and has a 50-50 look over here on these one-to-ones, it means that you process all that and you say, I'll take a shot at these one-to-ones breaking, but it's got to come back to my area inside of favorable large triggers for me to do it. And at this point, I don't know whether it's going to or not, but what I do know is that I had a great bottom that reversed this market, and I do know that I've got the best look for momentum that I could ever hope for, and strong triggers break things. I didn't have any loss of momentum on my small chart. I had a tiny little window of opportunity, and dag nabbit, it didn't get me, but I'm still in the fight if I get a pullback right here. Or Cav, maybe an impossible breakout of the NASDAQ. Which way is it going to break out? What do you think? And now it's anything can happen on the large chart. Nice one. So let me tell you a story about consolidation. And I hope this is helpful for you guys because when we get bored, we get bored. So check it out, Cav. I think you're going to like this. Alan, I don't have the link saved anymore. Let's start with momentum. Cav, Odds favorable, yes? Dig it? How do you feel about yellow one-to-ones with absolutely no trigger lines through it? My rules say I need a clear path. But let me show you what happens a lot. The sellers are cranking. The buyers fight back. The sellers push. Can't go short anymore. But I can't go long anymore. And I can't go short anymore. And I can't go long anymore. And I can't go short. And I can't go long. And I can't go short. The sellers are trying. And the buyers give a big push, right? Right to those yellow one-to-ones. Your rules keep you out of all of this. So there's two scenarios when the market's been consolidating, Cav. What you're probably going to have is a 50-50 here or a 50-50 here, right? That's going to be your first shot, that medium probability scenario. When the market has been consolidating like this, your 50-50 is either going to get its ass kicked instantly or it's going to be a huge winner. So right now it's 50-50 with divergence, and we'll see what happens. This may be the breakout up. There was maybe the first shot, but we're waiting for it to get out of this range that it's been in for the last hour, right? Look at that fight, but 1, 2, 3, 4 divergences off the bottom, tons of momentum, everything above. They're trying to break out right now, without a doubt, Cav. I need 62 to give me a little confirmation. I want to see some large triggers above that thing. That's my own personal, is I don't take 50-50s on a breakout after consolidation because I lose them more than I win. I really do. And we'll see what happens here. I don't know what's going to happen here. There's divergence on a 50-50 right at the yellow one-to-ones. This is the one that's either it's gonna run like a just crazy. Look at the fight happening. Or the sellers are going to use that key area and shut it down and take that win to resume the trend that they have been trying to fight. And I just don't know. Looks like the buyers have it. They're trying. Does that make sense though? These are the ones that you either look like a hero, 100% hero, because if they break out, guys, where are they going? Probably up here. After all of that fighting, if they break out and take control, that's probably where they want to go. If the sellers win, if this 50-50 fails and the sellers take over and they're able to break this lower, that's probably where it's going to go. But what we need is for them to get the hell out of this range first, to at least give us a fighting chance, right? I think my brother used to call this the fake out breakout. So just understanding that a little bit about markets that have been consolidating, it keeps you very aware of the management that's necessary in those scenarios. And then Safia says, when everything turns green, I'll take a little momentum, but I'm going to get out getting into the trouble areas because they've had a lot of trouble, right? Hey, Chef, have a great day, man. It's always good seeing you here. Go do something Englandy. How are we doing, new folks? Am I confusing the ever-loving snot out of you? Check it out, Cav. Isn't it crazy that we can begin to recognize patterns? Rule number 2 kept you guys from getting caught in this as a high probability trend trader. Understanding the pattern that when the market does this, this one either runs beautifully or the sellers say, haha, we fooled you, we stopped you out at the high, and now we're going to take a run to the bottom. And we'll see. Dollars to donuts, they hit 36.25, but they got to get through this key area here, right? Which means I'm not going short into that blue fib. Yeah. Oh, Craig, the consistency's there. And I want you to track it, and I want you to go through it, and I want you to do your due diligence. Um, and I'm not sure if you're on demo or if you've leased or what, but I always tell my demo people, if you go back and do it historically and look at it and follow the rules, I want you to go into it just saying Mark's full of crap. Mark is absolutely full of beans. Let me go back and do the study to determine whether he's trying to sell me some snake oil. And I promise you, if you do it, if you do that work, if you go back, if you circle those tails, if you write the rules on your chart, if you ask for feedback, you're going to realize that this is the greatest software out there. And I firmly believe that, and I stand by that. Um, John Novak will tell you if you find something better, let him know he's going to buy it. But the fibs are amazing, right? The fibs are amazing. Coupling the fibs with momentum is unbelievable. And then refining it down to a spot for entry is outstanding. You just have to learn to swing it. There you go, Cav. You also had two divergences against it. But isn't that cool? It did, I mean, I'm sorry that you lost, but didn't it do exactly what we said it was likely to do? Because of the patterns, not because it's the NASDAQ, not because of anything other than pattern recognition. Guys, this is what the spreadsheet is for. Patterns that repeat themselves. The first one is 50-50 with divergence. But 50-50 without divergence all day long. What are some other patterns? Split triggers is one of the patterns, right? Pivot stop out for continuation. That's the one that I took long earlier this morning. But these are all patterns that repeat themselves, guys. So every time you see something, you go, hey, hold it, I've seen that before, take a picture of it, commit it to memory. And then Cav, if you took this one with no divergence and everything up, divergence was your management, right? I'm not sure where you got in, but if you got in here, this isn't a hope trade. This is a get the hell out of the trouble trade, right? And now they're going to test that low. And now it's a 50-50 on the divergence low. Divergence prints, they pull back to the window of opportunity. Are the sellers going to take it, or are the buyers pissed off about what just happened? Does anyone know for sure? I don't. Tell you what, if I get a reversal bar, I'll sell it. And I'll put my stop above it. This is what you're doing. Are you willing to risk to be first? I'm not. And that's why we don't. And you guys know that I did that not because I thought this was going to be a winner, because I was pretty sure it was going to be a loser. And then Safia is catching the middle of the range. Catching the middle of the range and getting out at the problem spot. That's okay. 50-50 doesn't work. Everything rolls. The momentum is its strongest with no divergence. You sell it. Stops in the right place. Get out at trouble. But that's a 50-50 with divergence. And if you're trading the KISS plan, it says, watch this, no divergence on the 5-1. Divergence, no trade. If divergence prints, exit trade. Simple plan for consistency designed to optimize your chances of success. Of course, it's still in the window of opportunity, but this is the same scenario that we had at the top. And guys, this is just chart reading. All it is chart reading, and then taking the patterns that we recognize and working off of them. No, you didn't. Safia, I said that. I said no divergence. There's a 50-50 with no divergence. Once again, it doesn't come from a good top. And because it doesn't come from a good top, this trade is less likely to work. And sure enough, it didn't work. And if you're trading the KISS plan, it said that you needed a good top or bottom. Guys, the KISS plan is boring. The KISS plan is sitting at the bingo parlor with your grandma, waiting for something exciting to happen. But when it does, somebody gets a toaster. Somebody gets some fixident, right? Simple plan for consistency. If you're not here to win, if you're here to hope, if you're here to be active rather than profitable, it's going to kill you, guys. You're going to be bored. You're going to be upset because the market doesn't care about you. The market couldn't give a rat's butt. So let's talk about the 6 signs you know that you're maturing as we go into that last one, right? It always goes in the opposite direction, Cav. Always, if it stops in the middle of nowhere. If the market stops in the middle of nowhere, does it always go in the same direction? Let's use the S&P. Um, that one stopped in the middle of nowhere and pushed back to support. This one broke through the areas, came back to the midband and supports. This one from the middle of nowhere made it right back to resistance, and the large triggers didn't follow, and they tried to continue, but then that second higher divergence pushed it up. Pivot a little bit beyond, back to the mid-band, finishes the move to key. That's a bad top, but that one worked. Of course, that worked at the end of the day. So what happens a lot, Cav, is when you get these pivots from beyond the areas, kind of from the middle of nowhere, you're very skeptical of that mid-band or any areas around it because a lot of times the market likes to continue in the direction of that trade. Um, Pivot, everything is beyond, pulls back to the mid-band, and look how it continues down. This is the common pattern right here. Bad bottom, bad top, hit a mid-band, potentially finish the move. I don't know. You're asking me to predict, and remember, Cav, I don't have any idea what the market's going to do ever. Never. I don't have any idea. I don't know if it's going to continue down. I don't know if it's going to go up. I don't know any of that. The only thing that I'm 100% sure of, um, and this takes the burden of knowing off of me, is that when I have momentum, a clear path in an entry area, that approximately 70% of the time, I'm going to win my trade. And what I know is that anytime I remove one of these from the equation, I no longer have a statistical advantage. And I know that that stinks. I hate not knowing. But the fact that I know 100% that I don't know, whoops, sure does take a lot of the burden off of me. So here's your bad top, right to mid-band and support, right? And now look how the market went back up. And what's it bouncing off of? Am I the only person that's watching this happen live? Pretty cool, right, Cav? Bad top. Watch out for the mid-band. Let it reverse. Where are we going? You think it's going to hit that fib? Because that's where they tried to get here. And the seller said, nope. And the buyer said, yeah, but we really had plans, guys. Why not give us a trade? And let's see if that momentum takes us to the next area. Guys, this is a huge pattern. This is why 50-50s from bad tops aren't your best bet. Paul knows it. Nice entry, quick profits, not willing to lose. Beautiful. And he calls it unfinished business. Thank you, Paul. It means that they wanted to get here but couldn't, so Paul's looking for them to finish the business. And now we'll just see if they make it or if they catch a stop. Two divergences, Paul says probably going to push lower. Great trade, Paul. Because I guess all of this to be said, Cav, I have no idea, brother. I never know what the market's going to do. That's why I trade patterns. And the more that you study patterns, you say smart shit like this. 50-50 after consolidation. If it runs, it's great, but man, that's not my trade. Because they're right back to the BS, aren't they? Guys, this is textbook fight. This is where people blow out accounts. This is where people lose everything, where kids don't get to go to college, where Ferraris get repossessed. This is where next-gen traders go, I'll just wait for the best of the best. Maybe I'll draw a picture on a piece of paper. Maybe I'll play a video game. Maybe I'll call my wife and tell her sorry about being gassy last night. Right? This is one of the strongest lessons I ever had. And you know what stinks though, Cav? Is that one of these is going to work, right? And it's going to run like a mother scratcher. But how many are you willing to lose to hope you get the runner? And that's the biggest thing. And I'm telling you right now, one of these is going to work. The buyers or sellers are going to win. They won't stay here forever. And when they do, that's where they're going. Accepting that I have absolutely no idea which one it's going to be, that's what keeps me on the safe side of stuff. And that's why we rules-based trade, guys. That's why we only give ourselves the idea that either a trade fits the rules or it doesn't. So while the NASDAQ is doing nothing, you know you're maturing as a trader, and I don't care where you are in your trading journey. These have held true for me. First, you manage your risk, and then you manage your reward, guys. We manage our risk using the software, using the methodology by making sure that we have odds favorable momentum, right? That we're in a market likely to push. We manage our risk by making sure that we're not trading into one of those decision-making areas. And guys, I go to great lengths to make sure that you're comfortable identifying them. If you're not, I want you to raise your hand and tell me. And we manage our risk through these outstanding freaking entries, through these pullbacks to areas of support right there inside of favorable large triggers, the same entry that allowed Paul to get paid and have zero risk. He managed his risk through advantages here, through the perfect entry, and through getting to break even when it was appropriate to be break even. Guys, everything Nexgen is designed to allow you to manage your risk before you manage your profits. The second one is you're completely relaxed when making trades. It took me, I'm not going to lie to you, it took me about 1.5 years to get to this point, almost 2 years probably, to get to the point to where when I entered a trade, I know that I have so many advantages that it's just out of my hands, and I don't get sweaty palms, and I don't adjust my screen, and I've taken a shower in the middle of the trade because that's it. My rules are met. This is what it is. This is what I have to take. This is what my plan says. When you start getting nervous, this is where, when you start getting nervous, or uncomfortable, you're typically breaking your rules. You know that you're forfeiting advantages, guys. So being aware of that does a lot to move you towards that level of maturity. Not forcing or chasing trades, not trying to make something happen. Not taking trades outside of your rules, right? Because you just need that money. And trading shouldn't be your daily adrenaline fix, guys. It shouldn't be your entertainment. I'll be your entertainment, but your trading is your job, guys. Go jump out of an airplane if you need an adrenaline kick. And then this is one of the biggest ones that I'm going to tell you right now. This is where most traders fall short. Is one, they don't have a plan. So everything is based off of emotion. Guys, your emotions will kill you. It's the same reason she broke up with you your sophomore year of college, right? You're an emotional wreck. When you follow a trading plan, when you do the same thing every time because it presents a statistical advantage, then you don't care if it wins or loses because you know that it's likely to win more than it loses, right? Like if I flip a coin, heads or tails, you don't have any idea. It's 50-50. There's no idea. So every time you bet heads or tails, it's a crapshoot. But if I weight one side of it, and now it's more likely to fall on heads than it is tails, wouldn't you bet heads every time, knowing that there will be times where tails are going to come up, but you now have a statistical advantage. And the idea isn't the one coin toss, it's the 25, the 30, the 40 coin tosses. And this is what your trading plan is, guys. Your trading plan is designed to help you identify the weighted side of the coin so you can take the same bet every time and win it more than you lose it. And that's what that KISS plan is designed to do. And then this one's important to me because I'm a hippie. Um, Guys, your worth as a trader and your worth as a person are two separate things. Um, if if anyone talked to my kids the way traders talk to themselves when they make a mistake, I would break their jaw. They'd never find the body, right? And if anyone talked to you the way you talk to yourself, you'd probably go fisticuffs in the parking lot if that's your thing, or you'd be offended in the corner, whatever. Guys, it's okay. You're on a learning journey. I want you to focus heavily on the process, enjoy the ride, make the mistakes, go screaming past your limits, doing things wrong, so that you know where those limits are. And that's so important. So that's just a little 6 signs you're maturing as a trader. Check it out. The buyers are trying again. Are they going to get above that area, Cav? And your goal tomorrow is no 50-50s, huh? Cav, you're going to be bored. I'm not going to lie. Can I tell you something? And guys, this plan right here, if you're not winning consistently, this is your plan. This could be your plan. I don't give trading advice. If you find yourself trying to create trades outside of what you know wins more than it loses, and I put this challenge on everybody, I do it. I say, if you call me, text me, if you send smoke signals to me, and you're saying, Mark, I'm not hitting my goals anymore. I'm gonna defer you to this, and I'm gonna say, do me a favor, give me 5 days. Give me 5 days. Cav, I love 50-50 trades. But there's the best way to take them. Maybe instead of eliminating them, because you're eliminating opportunities to make money, why not take them only when they're the absolute best, right? Because they're great trades, or I wouldn't have put them on this plan. And the idea is go back to the 50-50 trades that you've taken, Cav, and see if it fits. So take all 4 of those pictures, and I want you to take this checklist and tell me how many of them fit the checklist, right? That's it. Because that's going to do 2 things for you. The first thing it's going to do for you is if you were not following the checklist and they lost, it's going to reinforce the idea that there's a better way to take it, a safer way, a higher advantage way. And if they all fit the checklist and they still lost, well, then there's the great lesson that 4 trades don't define a plan, right? Go find 20, 25 of them, and let's see where that percentage is. I just dropped it right above you in the chat box, and now there's one below you. You are literally surrounded, my friend. Cool. So you can click the download button. Couple ways to do it, guys. You can do the download button, or you can literally just click it and drag it off to the side and just put it right on your desktop. Print it out. But here's the other side of that is I've told people, Mark, I'm not finding success. Mark, I'm not winning more than I'm losing. Mark, I'm not making the money that I was making. Mark, my losers are up. My win percentage is down. And I say to them, go back to this plan, guys. Go back to this plan for 5 days and tell me what happens. And I'll tell you right now, 95% of humans can't do it Because it's not enough action. Because they have to sit still and do nothing and wait for the rules to be met. Oh, Cav, there's your 50-50 after consolidation again. Man, they're trying, aren't they? Oh, that was a big push. You can see the fight. Um, but guys, there's so many people that just simply won't. They won't do it. When I was a personal trainer, everyone wanted abs. I want abs. I want abs. How do I get abs? And I would say, well, in order to get abs, I need you to not do this. Well, I don't want to do that. How do I get the results without the effort? Well, you can't. Yeah, but that's not the answer. So Mark, how do I get into a consolidating market and make money if there's no advantages? And the answer is you can't. Sit on your hands, do nothing, right? And you're both right, guys. It's diet and drinking and all sorts of things. But I used to challenge people and I would say, do me a favor, Gino. Starting at 7 a.m. tomorrow, send me a picture of everything you eat or drink for the next 24 hours. And Gino will be like, I'll do that. My diet's great, which is the equivalent of saying, I'm totally following my plan, Mark. I'm doing it right. This is just messed up. And Gino's going to send me a picture of egg whites in the morning. And he's going to be like, dude, check this out. Ha! I told you my diet's perfect. And then 2 hours later, he's going to send me a picture of a protein shake. Dude, Mark, I told you my diet's perfect. And then right around 2 o'clock when I'm waiting for Gino's lunch picture, it doesn't show up. And then 4 o'clock comes and Gino's on radio silence. And then 6 o'clock comes and I text Gino and I say, Gino, what happened to your pictures? He goes, oh man, my kids had a bag of goldfish and I ate half of it. And then I had to get them Oreos because I gave them all the goldfish and I had two of their Oreos. And then he didn't finish his Capri Sun. So I figured, man, I should probably not waste that. And by 6 o'clock, what Gino realizes is that Gino doesn't follow his plan to the letter. And Gino doesn't have abs because Gino isn't focused on the absolute best. But we convince ourselves that it's okay. I convince myself that this 50-50 long with divergence is the right trade. And then when it loses, I'm a victim. I'm not accountable for the mistake that I made for breaking my rules. When this 50-50 doesn't win down here, I play the victim. The market sucks. The software sucks. But the reality is, guys, is I've given you a plan, right? And I've given you the keys to success. I've given you the best elliptical in the world. All I need you to do is get up on that elliptical and get your reps. So what are we waiting for, Cav? We're waiting for small and large above 15,354 because then I have a clear path. I have, and Paul, to be honest with you, what if there's more trades? What if you fill it up with losers and you skip winners? What if, um, I get it. I understand it. I know why they do it. I'd rather just follow rules and not limit myself to a number of trades. That's it. If I'm going to limit myself to a number of trades, I'm just going to limit myself to the trades where the advantages are there. I don't need a ping pong ball or a T carafe to understand that, right? If I'm over trading, if I take 25 trades in a day, it better be 25 trades that fit the rules. And if not, I don't need a ping pong to tell me that I'm breaking my rules. I don't need a jar to tell me I'm breaking my rules. I have to put it in the room. I have to get feedback. I have to look at my spreadsheet. And then when I realize that I've gone rogue, I need to get my shit together. I need to make a choice to get my poop in a group, to follow the advantages. And if I'm not sure if I'm following the advantages, well, then I sure as hell better be posting in class, right? This is a divergence high, Gino. That's not a reversal. This is a divergence high. This is a line in the sand created by the sellers where they stole the momentum from the buyers. And as they come back to it, I have to be aware of it. Took this trade, nice gap to the triggers on both the downside. So 1139, 1139. So what you're saying is that with every trigger line below resistance, with all of your triggers red, see how it closed to the large triggers, Cav? Do you see how there was a full bar until it could smack them? That happened right here at the top of that move, right at resistance. That's your gap theory. That's your pucker factor, as it does exactly what the pattern says. So you look for your opportunity up at that resistance here, and you've got less risk and more profits, brother. But that's a great trade. It's a great read because it closed the gap to the triggers, right? And at that point, you don't have an area inside of favorable large triggers. You're just hoping that a mid-band holds when patterns tell you that 76.16 is the most likely stop spot. So great job keeping your stop on the other side. And Paul, I'm not knocking the ping pongs, dude. I can't stress that enough. And you've got to find what works for you, guys. You've got to find what works for you, whether it's a type of trade, whether it is a pattern, whether it's whatever it is, right? And guys, this is Safia going counter trend trade. Everything says up and she goes short, right? And she gets her ass kicked. And then she goes long again off support with everything saying up and she makes her money. How many of these can you afford to lose? How many of these 50/50s with divergence in a consolidated market, how many of these can you afford to lose? And are you going to catch these? This is boredom. And guys, this is a termination condition at 64. My brother used to tell me, and I love this because it's so true. He goes, Mark, how many times are you going to break your rules until you're sick of losing? This is a textbook termination condition, guys. NASDAQ is in some crazy huge fight. Safia, take care. You were an absolute rock star today. And guys, what you'll find is even if I don't agree with everything that you're doing for my own personal plan, I love the chart reads. I love watching you guys grow wings and fly. How do we feel about that termination condition? Did anybody get their ass kicked hoping that it would go? I hope not. Or if you did, I hope you annotate it, post it in the room. Let's talk about it. Guys, NASDAQ, every market lets you know what's going on, right? Weak triggers, weak triggers. If you took it in the mid band, it made you suffer because there's no momentum. Cab, there's your trade. Straight to Fibonacci support. So guys, this is it every day. Craig, welcome. Michael, it's great to have you. Who else is in here that's still relatively new? I'm just going through my list. DJ. Freddie, I'm glad to see you in here back in class. Let's get you where you want to be. Guys, it's been an awesome room. Your questions have been amazing. I appreciate each and every one of them. I hope you're learning stuff. If you don't get anything out of today, Fibonacci and rules work, guys. Fibonacci and rules work. All you have to do is learn how to work it. So for those of you that are on demo, you will not be a professional trader at the end of the demo, probably. You're going to have a crazy solid foundation that sets you up for success. You're going to understand how I teach this room. You're going to understand that you get feedback and accountability every day. All you have to do is participate. You're going to see that it can be done because Nexgen users are posting their winners one after the other that follow the rules. You just have to learn to do. You just have to learn to see what they see. So we haven't had a rule met yet, not since 10:23 a.m. 90% of what you're doing is sitting on your hands waiting for advantages. And guys, do me a favor. When one of these guys win, it was 11:16 when we said where they were going. When one of these guys win, somebody post a picture in here. We'll look at it tomorrow. I'm going to use Fibonacci to know that when my rules are met, where's that market likely to go? There's a picture. We'll come back and do it. You're going to golf cart to the beach and watch tourists. You're that guy. Left lane on the highway in your golf cart because it's your right. Good stuff. Are there any questions before we call it a day, guys? Is there anything I can do for anybody before we call it a day? Um, Thank you for being here. I enjoyed it. I hope you enjoyed it. I hope you learned something. I hope you're walking out of here a little bit smarter than when you walked in. Snorri, it has been for an hour and 50 minutes, and it hasn't had one rules-based trade. Take care, Saf. Calf, sorry. Craig, thanks for being here, man. Did you get caught, Snorri? Or did you just say, I'm going to wait for my rules to be met? Not trading. Brilliant. Snorri, I know that you have a history trading, right? You traded before Nexgen. Is that, am I right on that? And I know that a lot of you traded before Nexgen. How many of you would have gotten caught in this? I would have, even before I learned my rules. How many people with previous experience would have gotten probably, maybe not slaughtered, but at least beat up? If you are coming to me and you have experience in the market, would this have made it better? Most people tell me yes. Most people tell me, yeah, this definitely helps me with an advantage. But I want to hear it from you guys. I love the opinions on the software. My wife didn't give birth to it, so I don't get offended if there's something you don't care for. A lot of times, when people don't care for something in the software, it has a lot to do with an understanding or a lack thereof. So I like to try to clarify, but isn't it clear that we don't have momentum to the downside? And isn't it clear that there isn't a clear path to the upside? So I can't do a darn thing. And here I don't have the best momentum, but I do have a clear path. And I don't have an area inside of favorable large triggers. I did yesterday. What did I do yesterday? I don't know. I think I made 400 or so per contract. There's a lot of patience yesterday. It was Monday that was horrible. Monday, I sat on my hands forever, and I finally got one great trade at the end of the day, and I think I made $500 or $600 on it. But that was nothing. Monday was a one trade day. My headphones just canceled out. I'm not in the bathroom, I promise. But anytime that happens, my AirPods disconnect, so I'll try and reconnect them. And that usually fixes it. But sometimes they just let go after a while. Maybe the charge is gone. So, Snorri, how many C are you trading? Is that days? How many markets? How many contracts? I traded two lot. That's it, guys. 90% of my life is dedicated to this classroom. So when I trade pre-market. And if I don't have something going on in the afternoon, I trade after class. But the reality is I don't have the time commitment to do this all the time. So it depends. I always start with two story. I'm not afraid to bump it up if I really really like the trade, and I'm not afraid to add on if I really really like the trade. So I start at two on almost every trade. And then once, like if it's the high, let me see if I can find an example. No, that's an older one. So like I took a trade yesterday. There was a long, and I ended up having to manage out of it. Might have been this one. So I take my entry, bad stop placement. I take my second entry. Everything is in. and then it pulls back and gives me another trade, and I added on. I put 2 more contracts on here. And then when things started to change a little bit, I took 3 of them off at 300, and I think I got break even and a couple ticks on the second when it was supposed to go. So I was into and got stopped out, got into again, added 2 more, and then when things changed. So I kind of play with my contracts a little bit. I play with, but ultimately it starts at 2, and I'm a huge fan of taking $100 profits on my first, and it drives my brother nuts. But it just depends on the setup, right? If I don't have the best triggers and I'm not inside, if I decide to take it here at 67 because it's likely to hold based on termination conditions, I might take 2 or 3 off at $100 and get out of that trade and go break even and see if the last one runs. Because my brother is so good at reading indicators, Snorri. We have very different pain tolerances. My brother, and it amazes me, and this is why I use him as a coach. My brother will get in here, and my brother won't give 2 craps about what happens until it hits his target here. Because like the large chart always said, Mark, the large chart says, why are you worried about all these little fluctuations? Just do what the big chart says. But he can do that because he's got 25 years. And I made him proud this morning because this trade, where I held all the way up to Fibonacci resistance, this is what John Novak teaches. If you come to John in a private seminar like he's doing, if you come to John and just say, John, I'm trying to learn my market flow chart. There's a market flow chart that he uses with a different trigger configuration that helps him hold for these huge moves. And that's what I used here. Normally, there's no way I hold for these. I start getting antsy. I really do. I just have commitment issues, I suppose. But there was a range chart with the strongest of the strong, and there's a pattern on the range chart that I used for stop placement. And it helped me carry to these big ones. So this is his trade. Get in here, get out here. Don't even care what happens in the middle. Mine's a little different. So it's just different. And Snorri, yours may be different. Look at this. It still hasn't broken out. And Paul's is different, and Sophia's is different, and Jose's is different. And that's kind of the cool thing, is everybody's got this different look that makes them comfortable. Some people love momentum trades. Sophia worked a lot with my brother, and those trades that she catches have a lot to do with that market flow, with those trigger lines on the market flow. And guys, I'm telling you right now, if you are an adrenaline junkie and you want to make sure that you're holding for the bet, for the biggest moves and all that stuff, there's a lot of advantages to be had there. Spend some time with my brother. He'll blow your mind. But if you don't have a foundation, if you don't know what you're looking for, if you don't know what it takes to get into the market, it's going to become difficult for you to go to the next level. You can't go to calculus if you can't add, right? You can't do algebra if you don't understand basic subtraction. So build that great foundation, take a lot of pictures, work with me for a while. Let's get you focused on the best of the best, and then take it next level if you feel like you need to. Because a lot of people, and it's just human nature, aren't satisfied with the best trades. They want all the trades. And there's ways to find them. But with weak triggers and a couple divergences and no areas inside, that's not how you find them, guys. That's the one that you avoid. So that's my class. Thank you so much for being here. I hope you guys had a good time. I hope you learned something.